Okay, good morning, friends. Hearty welcome to all of you for this session on the Sunday morning. Let me start the session by thanking Ajay Prudhi, my team member, the qualified financial planner, for helping me in making this PPT. Actually, he's with me from the beginning. He's the person who's instrumental for making all these PPTs for my presentations. Congratulations to all of you. Thank you. Hearty congratulations to all of you. I'm sure you are all serious about your personal finance. That is why you have taken the pain of joining this session on a Sunday morning to attend a dry topic like personal finance. Normally, people will never be keen on this type of topics, especially on Sunday. So, hats off to you for joining for this session. So, let me share my PPT to start with. I hope you can see my PPT.
So we can see it.
Okay. So the topic of the day is personal finance, what the lady of the family must know. The reason behind this presentation is I found out during my experience in the last couple of years, if the lady is taking interest in the personal finance of the family is in a better position compared to where only man is managing the finance. So whether it is a male dominated subject or not, the fact is that wherever the lady take interest, it is good for them. So there's a background to start this program. I'm sure you will get some insight on this personal finance, which will help you in managing the finance for your family. So let me introduce myself to start with. For the people who are not known to me, some of them are my clients known to me, but I'm sure there are so many people who don't know me also. So let me tell you something about me. I am one amongst you. Started my career fresh from the college, joined LIC, worked for 11 years there. Left LIC in 2000 when the private sector opened up. Worked for 3 different companies, Kotak Life, Bajaj Allianz Life, SBI Life in the next 10 years. Then in 2010, I resigned and I started my own firm, Fenmin Financial Planners in Mumbai. So let me tell you why I left my job and started this firm in 2010. So though I have worked in many cadre, in many states, in many companies in the last 20 years, starting from a clerical post way back in 1987 to heading a branch, heading a state, heading a region, then heading a vertical in the head office. Even being a member of the management committee member in my last job, I realized I am unable or I am helpless in stopping the wrong selling of financial products happening in the country. When I inquired about this, I realized the same thing is happening across all financial products, be it credit card, be it home loan, mutual funds, personal loan, whatnot. All financial products in India are meant only for the companies and the distributor and a handful of employees. So in those 20 years, I could enjoy a lot of salary, incentives, foreign trips and all. But at the end of the day, it started pricking my conscience that this money comes from the hard-earned money of some poor investor sitting in Kanyakumari or in a rural part of Bihar, and we are being a party to it. And most of these products are not meant for the investor or the policyholder. So I decided to leave this and start my own firm. So that is how I formed the Finwin Financial Planners in 2010. So what I do, the last 5 years, we are a 4-member team now. 5th person is joining tomorrow. So we have 3 financial planners. So we have around 500 plus families. We give fee-only financial planning advice. So what we do, we study all financial products available in the market, be it insurance, be it mutual funds and all. Then recommend the best products to the client so that the client will never purchase the wrong products in their life. And this protects their interest. So we don't get any commission. We don't have any tie with any company. So we can select the best one available in the market in the interest of the client. That is called fee-only financial planning. We are a firm of 15 to 20, around 25 members are there now. It's called fee-only India. We have a movement of such planners. There's a website called fee-only India. We can see that. There are 25 to 30 planners now, but very few people are coming to that line. So those are fee-only planners who takes clients' interest as the top priority. You don't have any commission. That's about me. And now let me get into the topic straight away. This is about what way a lady should take interest in learning the personal financial lessons. Let me tell you some background information about this, or what you should do to start with. Involve yourself in financial discussion at home. I know everybody will not like it, because in some family it has been considered as a male predominated area. The husband knows everything, wife don't know anything. This is a very sad situation. I have seen this thing right from my family in my boyhood. Father knows everything, mother don't know anything. So what will happen? Let us say if the father is having say 50 lakhs debt, is paying heavy interest, the mother will not be knowing, or the wife will not be knowing, and wife will be asking him to purchase a car or a house again. I'm aware of this happening in many families. So a wife should know what is the family's financial situation and involve the grown-up children also. It is not that it is only husband and wife should know. The grown-up children also should know where they stand. Don't tell the children that you have 10 crore in mutual funds and all. Then that will create problem. But they should also know whether your family is on track or not, so that it will benefit them a lot. And why they should also learn the basics right from the beginning at the young age, because the world is going to be more complex day by day. Trust is lacking across financial sector. We can't trust anyone. Golden days of trusting the bank managers are gone. Now the bank managers are the most dangerous people. I mean what I say. So you should train your children in such a way that you should know where to invest, where not to invest. Otherwise, by the time they get their first salary check, they will make all mistakes in the next couple of months' time, because everybody is interested in taking money to their wallet. All of you must know where you stand. I'm talking in terms of family. You must know whether you are in a safe financial position or in a bad position, whether the husband is in a safe job or in a shaky job, so that you will also be add more support to him, so that it will benefit the entire family. Look at this line. Every salesman is having an eye on your wallet. Be careful. 90% is not good for you. What is the meaning? I will explain with a simple example. Let us say you are getting only 100 rupees salary in a month. Example. Out of 100 rupees, you are spending say 70 rupees on your EMI, household expenses, education of children, everything. Balance, you have around 30 rupees to invest. So out of 100, 70 goes towards expenses, 30 goes towards investments. This is one way of looking into that. So what everybody is doing, so as an investor, you should be thinking how you can reduce little bit from that 70 expenses and increase that 30 to 35 to 40, 145, like that slowly. But what a salesman is in the market is doing, from that 70, he is trying to encroach your 30 rupees and trying to take away another 5, another 10, 15, like that. You will have only 10 or 15 rupees to invest. This is what is happening. Where is a Swiggy person, Zomato person, or the Amazon person, or whatnot. There are hundreds of people like this. So each salesman is having an eye on your wallet. So you should protect your wallet so that it is beneficial for your family. In some cases, we cannot avoid all unwanted essential expenses, but you should be careful. There should be something for tomorrow also. Misleading advertisement. Every day I'm seeing advertisement. There's a advertisement standard body of India. I somehow wonder what's the use of that body. Now, of late, I'm seeing this advertisement, bike insurance. Amir Khan with the wife is coming in a bike and telling there's no bike insurance. Police is catching. So what happened? Immediately online, he's purchasing an insurance and showing him to a policeman. Because it is Amir Khan and it is an advertisement, policeman is allowing him to go. If it is me and my wife, what will happen? We have to pay the fine. As simple as it is. So these are all misleading advertisement. 90% of the advertisements are like that only. So you have to be very careful what is right, what is wrong. Let me ask you some simple questions. How many of you know the important login ID and password in the family? It has happened to my client last month. Husband was in coma. He's in coma. He's having enough money in the bank. The wife don't know even how to withdraw money. She don't have the ATM password. So what is the use of having 10 lakhs in the bank as emergency fund if your spouse even don't know the ATM pin? How? I don't know how you are going to manage it in your family. Depending on the family situation, you should develop a mechanism so that everybody in the family should know in case of emergency how they should handle it. And this I'm talking to your husbands, or if husbands are attending it. You should always make some investments in your wife also. I'm talking about mutual fund investment. It is not to avoid the tax. It is not possible. If an earning husband is investing in wife's name, the income will be clubbed with your income and you have to pay the tax. That is not the purpose. Purpose is when you make some investments in mutual funds in wife's name, her KYC requirement is taken care. KYC means now you are customer. Once that is there, if tomorrow if something happens to the husband, it will be easy for the wife to transfer the entire money from husband's name to wife's name. I don't have much investments in my wife's name because she's a housewife. But I have done a token investment in her name and ensure that her KYC is update. So tomorrow, if I'm not there, it will be one request from my wife to the mutual fund company, giving her KYC details. Mutual fund company will transfer the entire investments in her name. So that's the thing which a husband should do in the interest of the family. Another motivation for this program today is the last line. Many single mothers, because I always used to give some discount to single mothers and senior citizen who's having less income and all. So last 2 years, I got a lot of single mother clients, and some of them are practically zero on finance. There was clients who don't know even how to fill a pay and slip to deposit the money in the bank. That was the situation of some of them. But now, in these last 2 years, some of them have become very expert. I really feel very happy when they are sending messages telling that this fund is doing a bit slow. Can I move to some other fund? So over a period of 2 years, they realize even how to review a mutual fund. Or some of them are asking, this bank is giving better return. Can I go there? So this way, some of them has really inspired me. And I want to quote you about a lady who's a wife of a CEO of a company, a mid-sized IT firm. He's a big investor, but his wife was not involved in this. But later he motivated her to get into this because he arranged a session, my session in his office long back, some 12 years back, for his employees. So he's taking a lot of interest. He asked his wife to be my client, and wife was not having much knowledge about these things because she was entirely into a different line where she's an expert. But personal finance was totally Greek to her. But now she's expert. So I told her yesterday I'll be quoting her name. Sorry, without naming in this thing. So I've seen when ladies are taking interest, they are becoming expert than gents. So this is a motivation for me to arrange this webinar. Now let me get into the topic, starting from life insurance. I know 99% of the people who are attending the session will be having at least one life insurance policy. But what type of insurance policy? That is a question. This is a situation in most of the policy, paying 1 lakh rupees premium and covered for 5 lakhs. Let me tell you, or let me ask you a blind question. Is this type of a policy is of any use to your family? Think about a situation, a person, husband earning. I'll be taking an example of a middle class family with a husband, wife, and 1 or 2 kids throughout this presentation. So those who are not having under that status, single or divorcee or husband no more, people can avoid certain things and take only whatever is relevant for them, because it will be easy for me to explain. Let us think about a situation where husband, wife, 2 kids family, a middle income family, where a wife is a housewife. Let's say a husband dies suddenly, and he's having a policy like this. He's paying 1 lakh premium, and the coverage is 5 lakhs. This 5 lakhs is going to be of any use to the family. In this current situation, this 5 lakhs will not be sufficient even for the last hospital bill and a decent burial. Sorry to say that. That is a fact, because I've seen these things in and out in the last 30 years. And what will happen to the family? With this 5 lakhs in hand, they will not have anything to save, anything to invest for their children, for their family. So the family is on the road. Whereas look at the premium, he was paying 1 lakh premium. So is it a small amount? No, it's a big amount for a middle class family. So after paying 1 lakh premium, if the coverage is only 5 lakhs, that means this policy is not meant for you. So this is what is happening in case of death. Now let us see what will happen to 99% of the people who are not dying, who will be surviving to the end of the policy, that is maturity. What will happen? Return will be 4%. Now it will not be even 4%. So think about a situation. You are paying a premium of 1 lakh for the next 20 years. And after 20 years, you realize that this investment has given just 4% return. So it is too late to correct. So this policy is going to be anything beneficial to you. So it is not going to be beneficial in case of death of the policyholder, or it is not going to be beneficial in case, or most of the cases, when you survive and get the maturity benefit. So this policy is not meant for you. It is meant for the agent. It is meant for the insurance company. Now look at this slide. Why banks are pushing insurance product, relationship manager, wealth manager, and so on. I'm sure you're all aware of this. When you have a 1 lakh fixed deposit maturing, what is happening in the bank now? The bank person is calling you proactively, telling, sir or madam, your policy, FD has been matured. Now the interest rate has come down. Why not you put it in the unit linked insurance plan of XYZ company, where you are going to get 12 to 15% return. I have my clients, their parents asking me, telling, sir, this FD is giving only 5% now. Even as ICICI is giving 5%, 1%. Just now I'm getting a WhatsApp message. Yes, bank interest rates has come down. But that doesn't mean that you should move to an insurance policy where your entire money is at risk. So what is happening in the bank? Let me tell you that, because this is something which is not known to many people, especially housewives. Each bank is appointing relationship manager or wealth manager. When you have, say, 1 or 2 lakhs in your bank, then you have a relationship manager. The moment you have some 15, 20 lakhs in your bank account, you will get a wealth manager. So what is the meaning of these things? Why banks are appointing these people? Are they going to help you or are they going to help the bank? These employees are employed only to meet the sales target of the bank. So they have daily targets. In private sector banks, there's a morning meeting where the bank manager give target to all these people, and they are waiting anxiously to wait for their clients to come. So by the time your FD is maturing, you are coming, and then naturally what will happen? He will give you a unit-linked plan instead of a insurance policy. A relationship manager is going to Pattaya every year, whereas wealth manager is going to Greece or Macau with the family every year at your cost. Please understand, the golden days of trusting the bank manager, all those days are gone. Don't trust anyone from the bank. Your money is looted. You can have savings bank, recurring deposit, and FD from the bank, or you can purchase senior citizen savings scheme or Suganya Samriddhi scheme, such government schemes from the bank. Nothing can be done. Other than that, if you buy any product from the bank, you are lost your money. So be very careful. These things are not good for you. Be very careful with the bank. Now, what is the reality? Term insurance is the ideal form of insurance. What is term insurance? I know some people will not agree with me in this because generally there's a feeling the ladies don't like to hear about the death of the husband. But believe me, in the last 12 years, I have seen 4 deaths in my client circle itself. Within a small group itself, I have seen 4 deaths, out of which one person was adamant of taking policy, his family is suffering. Other 3 people, they had a good policy, their family, their financially, there is no problem, only emotional loss is there. So believe me, if you're a housewife, ensure that your husband is having a decent term insurance. Now, what is term insurance? Let me explain. I think you are all familiar with the car insurance. You are purchasing a car, so let us say 8 lakhs car, and you are insuring the car for the entire 8 lakhs by paying a premium of say 15,000 rupees. So why you are paying that 15,000 rupees premium? You know that you are not going to get any benefit out of that by way of a return of premium or anything. But what you will get, if there is an accident for the car or if the car is stolen, then the insurance company will give you the actual cost involved so that you will not have any loss from your pocket. That is the purpose of a car insurance. Similarly, in the case of a term insurance, if you purchase a 1 crore term insurance on the life, either if you are working in your name or in your husband's name, nothing is payable if he survives. So let us say a 40-year-old person is taking a 20-year term plan till the time he retires. And every year he is paying a premium of say 15,000 rupees. So what will happen? After 1 year, there are 2 situations. He paid the premium of say 15,000 rupees. I am assuming the premium is 15. At the end of the year, there are 2 situations. Either he is alive to see the next year premium due date and he is paying the premium happily, thanking God that I am alive. Second year again, he is paying the premium. Why? There's no guarantee that nobody knows when it can come, but it will come. So second year again, he is paying the premium. Again, third year, thank God, nothing happens. He paid the third premium. That is why it has to go. Yeah, I have done like that. Everybody is doing like that. But if you start thinking that, will I get anything back? Then you will not get anything. So if you pay premium for 15,000 rupees per annum for the next 20 years, you will be losing the entire 15,000 into 20. That is taken by the insurance company. But who is benefited out of it? Some people, maybe sitting in other part of the country, benefited out of this. You are lucky, you are survived. So if you want to benefit from term insurance, what is to be done? Not to die. So there's a saying always, everybody want to go to heaven, but nobody want to die. So that is a sad part of it. So in insurance, always go for this policy only. So what is the essence of it? You pay small money every year, like in the case of a car insurance, say 15,000 rupees for a 1 crore coverage. So what will happen? You will lose the premium 99%, let it go, but at least you will get a peace of mind that if something happens, your family is getting 1 crore. So that 1 crore is something worth for the family to take care of themselves and their children. Sorry. So if you purchase this policy online, the premiums are much cheaper now because the agent's commission is also saved. So you can purchase such policies online with much less premium. This helps buying a big cover at affordable premium. And what is the premium approximate rate? I'm telling you, for a 30-year-old person, 30 to 35-year-old person, you can purchase a 1 crore policy by paying around 1,000 rupees per month. That is 12,000 rupees per year. So it's a decent money. 1,000 rupees per month is nothing but a person spending on taking a family for an outing, or even more than that. This is something which everybody should do in the interest of the family. So for housewife, this is a very important point. Ensure that the husband is insured for a decent value, and for the working spouse, that is the lady is also working, ensure that both husband and wife are having decent insurance coverage, so that if something goes wrong, either for one of the spouse or both of them, then the child is or children are protected. This is very, very important. Then what is the reality in this? There is no maturity benefit. I already told you. You will not get anything back, but you have to thank God you have survived. Term insurance provide a huge amount to take care of the family in your absence. You can purchase it online. These policies offer global coverage. If tomorrow goes abroad and you are become NRI, still your policies are valid there also. If that happens there, some insured will be payable to the family, to the nominee. Absolutely, there is no issues. It's offering global coverage. To purchase term insurance, when your kids are financially dependent on you, maybe at the age of 58 or 90, 60, when you are almost retiring, your kids are all grown up, then there is no need for term insurance. When your parents or spouse are financially dependent on you, this time you need term insurance. Have loan, debts, liabilities, etc. Somebody is having 1 crore home loan. If there is no insurance, what will happen? If something happens, the home loan company will come and take the house. But if there is an insurance, the insurance policy will take care of the loan, so that surviving spouse and children can continue to stay in the house. Very, very important. You want your family to be financially secure. If you are not around, this is very, very important. This is a situation where you need a term insurance. As I told you, single working woman, unmarried, you need it if your parents are dependent. Otherwise, you don't need any term insurance. Single mother, yes, you need a term plan because your child is financially dependent. Very, very important, because your child is financially dependent on you. Married woman, of course, if she's working, she wants for herself. And if she's not working, so housewife, there's no need for term insurance on her name, but there should be decent health coverage in the case of husband, because very, very important, especially in the case of housewife, because there's no second income if something happens. So I will sum up the life insurance discussion here. So what I explained here is the only life insurance policy you should purchase from an insurance company during your working life is a term insurance. You can purchase it online. You need it only if you are working. So housewife don't need term insurance on her name, but she should ensure there's a decent health insurance, term insurance, the life of her husband, and she should be the nominee. So this is the only insurance policy which is worth. All other policies which is coming in the way of child policy, pension policy, ULIPs, all those things are not meant for you. If you get into such heavy premium policies, you are losing your financial freedom, because you will not have enough money to pay for other important goals. Now let us get into general insurance. It is again slightly complicated thing. I will try to explain as far as possible. One more thing I want to tell you, I have done similar webinar of 2 hours duration, one for life insurance, another for health insurance, another one personal finance, do's and don'ts. So those 3 videos are available in my YouTube channel, FinMin Financial Planner. So after the session, or whenever you are free, you can listen. If you are really interested in this thing, you can get the find deep trend of those things in more detail. But here I'll be going much faster, because we have to cover a lot of topics which a wife should know. Okay, so coming back to general insurance. In health insurance, I'm talking only about health insurance here. General insurance is a very big topic. I'll be covering only health insurance here. When you purchase a health insurance policy, there are so many complications in this. These are the common things. What is called copay. Copay means, if there's a, let us say you have a 5 lakhs policy and you have a hospital bill of say 1 lakh rupees for maybe some appendix operation or something. But don't expect that your insurance company will pay the entire 1 lakh. If there is a co-payment of 20%, I'm telling an example. If there is a co-payment of 20%, if there is a in the claim of 1 lakh, that means you will get only 80,000 from the insurance company, balance 20%, that is 20,000, you have to pay from the pocket. That is called co-payment. This is applicable mainly in the case of people with the health issues. If you are perfectly in good health, you will get a policy without all those things. But as you age, when you get into some lifestyle issues, then you will not get a normal policy. You will be getting a policy with this type of conditions. Co-payment, I told you, part of the payment has to pay from your pocket. Second thing is exclusions. So here what will happen? They will exclude certain diseases totally. HIV is of course very common exclusion. Other than that also, they will be excluding certain diseases, congenital diseases. What is there from the birth? Those things will be excluded if it is internal. All those things will be there. So exclusions are there. So only slowly companies are coming out more innovative versions. So it is improving, but still there are so many exclusions even now in most of the policies. The other thing is sublimit. So for example, if you get into a hospital where the room rent is high, in a corporate hospital now, but I call them corporate hospital because it's more like a business where the rent is very high. So to get a room even up to 10,000 has become difficult in a city like Mumbai. So if you have a policy with a room rent sublimit, Even though your total bill is within the policy, you will not get the full amount. So it's a very big topic, which I don't want to explain here in detail. You have to see that webinar, the health insurance webinar. I explained it very clear. So if the policy is with the sub limit, then you will not get the full amount. Another thing is waiting period. Waiting period means if you are purchasing a policy today and day after tomorrow you are admitted with some serious ailments related to diabetes or something, don't think you will get a claim. You will not get it. So there's a waiting period in all policies. So for certain diseases it is 30 days. Certain diseases it can go up to 2 years, 4 years, like that. So you must know what policy you are buying and whether it is coming with this type of conditions. So unless and until you purchase the right policy, when the claim comes, there will be pleasant surprise. So then there will be claim rejection, or you may not get it. It has happened in many cases, especially with the congenital diseases, etc. This is again another important question. Is health insurance required for your family if you have one from your employer? In most of the cases, they are both husband and wife working in the companies will be giving you corporate insurance. So it is very common. That is health insurance given by the employer. It is called a corporate policy. Mediclaim they used to call earlier. So olden days, the parents' policy was free. The premium was paid by the company, but nowadays insurance companies are charging premium for parents, but employees are getting the coverage without paying a premium. But every year they are modifying the conditions. It is coming out with some exclusions now. You cannot take treatment in all hospitals now. They are telling if you are an employee, say XYZ company, and you have a scheme with so and so ABC insurance company. So if you are having any health issue, you have to go to only this type of hospitals. You cannot go to big hospitals because there the bill is very high. So such restrictions are coming. So why I am telling this? Don't think that you can depend on this policy alone, lifelong. What will happen if you change the job? When you change the job, let us say you are getting 2 times package and you are joining a startup. Unfortunately, the startup company may not have a health insurance policy. So if there's a claim comes, you have to pay from the pocket. So don't depend only on the corporate coverage. Do you have an accident cover and critical illness? Yes. These things are again very important nowadays. The incident of accident is very high and critical illness are on the increasing side. Everybody knows. I need not explain that better. Day by day, new type of diseases are coming. Do you have a health policy for parents? Very, very, very important. People used to ask me, sir, parents now they are 65 and all, and the insurance company is asking premium of very high premium. You're asking 30,000, 40,000 rupees. I will ask one simple question. Parents are either 60, 65. You have to think about another 20, 25 years. They are going to live up to 85, 90 easily. So what will happen if you don't have a policy now? If you don't purchase it now, then 5 years down the line, they are going to become 70. 10 years down the line, they are going to become 75. So at that time, diseases are increasing. You will never be able to purchase a policy. So purchase a policy for parents irrespective of the premium, even if you have a corporate policy, because you cannot depend only on the corporate policy. There is no guarantee that that will continue forever. It can be discontinued anytime because all corporate policies are coming as a 1 year renewable contract. Your HR department can take a decision anytime to stop it. And when you are paying the premium for parents, you can claim that also for under section 80D separately. So your immediate family premium up to 25,000 is eligible under 80D. For parents, if they are senior citizens, which is the case in most cases, you can claim another 50,000 subject to production of the bill if they have a health insurance. So that way it will reduce your burden a little bit, but you must purchase a policy for parents beyond your corporate cover. These are the realities. Sublimit copay, I already told you, you will not get the full claim amount. Certain diseases are covered after 2 to 4 years. Concept of grace, very, very important. Grace period. Today we are on 22nd of May. Let us say your health insurance premium due date is 22nd May 2022. You are supposed to pay the premium today or before this. So some people will pay 1 week in advance. I pay 20 days in advance. Some people pay on the last day. That depends on the individual. But always believe the concept of grace period is tricky in health insurance. Why tricky? Let us say the premium is due today and your company has given a 15 days or 30 days grace period in health insurance. Some companies give 15 days, some companies give 30 days. Let us say after 1 week, you are in grace period. After 1 week, there's an accident. You are going to the insurance company to pay the premium. There is a bike accident and you are in hospital for a week. Do you think your claim will be payable? No. This is a catch. So you are paying the premium for the last 10 years. And for this year premium, you are waiting for the grace period. And still the policy grace period is there. But still, if there's a claim, you will not get the claim. So concept of grace period is very tricky in health insurance. The concept of grace period is only to continue the policy without losing your pre-existing disease coverage, no claim bonus, etc. But there is no insurance coverage during the grace period. Very, very, very important. So don't wait for the last day or wait for the grace period to pay the premium in health insurance, pay in advance. I pay 20 days in advance. In the case of life insurance, there is a life insurance coverage during the grace period. You can pay the premium without interest. But in health insurance, there is no coverage for during the grace period. Purchase a policy now for your post-retirement days. Why? I have not seen a single person after the age of 40 with a normal BP, normal cholesterol, normal BMI, without thyroid, without taking supplement and all. So days are becoming very tough nowadays. Everybody is working under tremendous pressure. So lifestyle diseases has become very common. BP is become a lifestyle disease. It's not a lifestyle disease. People are calling lifestyle aberration. And treatment taken outside India is not covered. So when you are taking a policy and going out of India, don't think that the treatment taken outside is covered. It's not covered. But even NRIs asked to take a policy for their post-retirement days in India, because you will not be able to purchase a policy close to your retirement days if you are planning to come back to settle down in India. So I used to tell all my NRI clients to purchase a policy now itself, so that you will have a peaceful retired life in India. Personal accident policy covers accidental disabilities. So in an accident, what will happen? Suppose in the case of bus accident, it happened even 2 days back. If you listen to all the news of an accident, there will be 2-3 people who are dying. I'm talking about a typical bus accident. 2-3 people will be dying. But 30 to 40 people are going to live with the disabilities. Media will highlight and create hype about the 3 people who died. Of course, I know that is a big loss. But what about the other 25-30 people who are with the accident? Some of them are lifelong disabled. They are unable to work. They don't get any benefits. They don't get salary. They don't get anything from the medical claim policy because they are not in hospital. After 15-20 days, they are at home but unable to work, disabled. So such people will be benefited by personal accident policy. It is a very, very good policy which I used to recommend to all my clients. Whereas treatment very costly, I told you, if they are not health policy. So purchase it right now. When to buy health insurance? If you are a single woman, unmarried, purchase an individual policy for you. If you are a single mother, purchase a family floater policy covering you and your children. Married woman or housewife, to ensure a family floater policy for covering spouse and children, everybody. What is family floater policy? In a single policy, all family members, I mean immediate family, husband, wife, and children can be covered. Don't add parents in that policy because then your premium will be very high. Who need a personal accident policy? All working women and men. Only working people. Housewife will not be getting personal accident policy. Only working people will be getting personal accident policy. They will ask for income. Purchase separate policy for parents if they are covered under separate policy. Separate personal accident policy for both of you. Don't purchase family floater policy because there will be some additional benefit. Similarly, in a family, if husband is having a diabetic and wife and children, they are not normal, then don't go for family floater policy. Purchase a separate policy for husband with a prompt disclosure and purchase a family floater policy for wife and children separately. This is what I have done in my case, because I had a surgery 10 years back, I'm not getting any policy. I have one policy which I purchased before that. I'm continuing that. Now for my wife and children, I purchased another policy. That is a practical way. There is no meaning in cribbing that I'm not getting policy. So I have seen some people are like that. When their policies are rejected, they start getting angry on all insurance company and they will not purchase for the other family members. It's not right. Accept the reality and move on. Purchase the policy for other members. At least they will be insured. So that's about health insurance. Let me sum up. Even though you are having corporate coverage from both husband and wife, you need a decent health insurance of high value to ensure decent health coverage during your post-retirement days. It's very, very important because otherwise you may not be having a coverage even when you change the job if your new employer is not having the coverage. Even if you are out of India now, if your plan is to come back to India and settle down, you should purchase a policy right now, because no insurance company will give you a health policy if you are diagnosed with any lifestyle diseases. I have not seen a single person nowadays under normal health condition after a particular age. So please purchase it at the earliest. Otherwise, the rest of the life you will be living without a health policy and it will become very, very difficult. Take it from me. The distance for a middle class person to poverty is just one hospital bill. It's a quotation which I have seen recently. That is absolutely true. You are a middle class family now, but if you get a big hospital bill, you are a poor man. So distance between you and poverty is just one bill. So take care of a health insurance policy. So the total amount you have to spend on a life insurance, a term plan, and health insurance, a personal accident policy will be less than 5,000 rupees per month. A middle class family can afford. So if you can spare around 5,000 rupees per month, your husband or the working spouse can be insured for around 2 crore term plan. Your family can have around 25 to 30 lakhs health insurance with a mix of base policy and super turbo policy. That is one way of reducing the premium would go, and a 1 crore personal accident policy. If you are ready to spend this 5,000 rupees per month when you are healthy, when you are earning, husband can ensure that your family remains safe in the absence of the husband, and wives can ensure that they will be able to manage the households in the same way, even though the husband is no more. There will be only emotional loss. So whether you like it or not, please spend this 5,000 rupees in the interest of your family. Now let us get into the other part. Insurance is over. Now let us get into the emergency fund. Why emergency fund? 2 years back, when the first COVID wave was there, people became very shaky. When the lockdown was there, people were shaky. Some people were shaky, especially people working in the hotel sector, tourism sector, and all, because they don't have money to survive even for 3 months. How much should be the emergency fund? So what is the meaning of emergency fund? In simple terms, if you lose the job, till the time you get a new job, you should not have any problem. You should have sufficient money. Karka, Karcha, EMI, insurance premium, everything should go. You can stop the investments at least, but Khana Pina, you cannot stop. Children education, you cannot stop. EMI, you cannot stop. So that much money should be available readily as emergency fund. That's the meaning of emergency fund. So how much should be the emergency fund? Let us say both husband or wife are working. In that case, 6 months monthly expenses. If you are spending 50,000 rupees on average monthly for all those things, including EMI, credit card, everything, then 6 into 50,000, that is 3 lakhs, can be the emergency fund if both the husband and wife are working. If only one person is working, preferably 1 year salary, 1 year expense, that is 12 months. So 12 into 5, 50,000, 6 lakhs should be the emergency fund. Where to keep it? Don't put it in equity fund and risky thing. Keep it safely. If the emergency fund is 3 lakhs, make it very simple. 1 lakh in savings account, 1 lakh in FD, and 1 lakh in liquid fund. If you have a tendency of spending, if the money is in savings account, keep only minimum savings, balance you put it into FD. In case of emergency, you can break the FD even with a penalty. That is not a big deal. Because there are some people who have money in savings account, they spend. So such people should be very careful. Keep the emergency fund in FD, otherwise they will break it. So make it very simple. Don't expect any return from this. This is for the peace of mind. Once you have this ready available, then you can start investing. You will have peace of mind. You need not worry about whether my employer is going to sack me or not. At least if you are smart, you can get a job in the next 6 months or 1 year. That is the purpose of it. This expense should cover credit card, EMI, insurance premium, etc. Very, very, very important. I've seen some families during the pandemic became very much upset about these issues. Emergency fund is a must. Without that, don't start any investment. Till the time, don't start investing. So after getting a job for an employee, the first priority should be to create the emergency fund. If any of you are listening to this session, if you're not having the emergency fund, check with your husband and ensure that emergency fund is there. Otherwise, stop even some investments, create this first, then only start the investment. Don't take more risk with emergency fund. Now let us get into the other part of investment. Let me ask you one simple question. In our middle class family, someone is getting a job. Let us say your son or daughter is getting a job at the age of 23 or 24. So what type of investment he or she will start? Or what you will advise as parents? So what will happen? We will ask them to go for an RD, recurring deposit. We are all familiar. Or we will ask them to go for a public provident fund, because we are all aware we can get tax benefit also. Or maximum, we will tell them FD, fixed deposit, which everybody knows. Chit fund. I'm not talking about the cheat fund. I'm talking about the cheat fund of government and all. So these are the things which we advise our children to go. There's nothing wrong in that also. These are all the way a typical middle class person start his career. And what the return we'll get, we'll be getting 5%, 6% maximum from these things. And we will run to a cooperative bank to get around 0.5% extra. Or we will go to a state treasury who is giving 1% extra. So this is the way we manage our finance. Now think about the same situation in a business family. What the young people in the business family do after completing their course and all, they join their family business. They will invest their partners, their skill, everything in their business. And whatever profit they are getting, they will invest back into the business and they make huge money. You can see in the last so many years in India, Tata, Birla, Ambani's, Adani's are all growing. Whereas a middle class person, he is still struggling to pay this 1.5 lakhs under ATC. He is running 2 chits to get his daughter's marriage, and he still remains a middle class only. He will never come out of this middle class to the upper class. Unfortunately, some of them from middle class will go to the lower class also, if something like medical will come. But these people, they make money again and again. Can we also invest in such businesses? This is one thing a middle class person should think about this. Is there any way where we can also participate in their business? Of course, I know Adani or Ambani will not make us partners, but there are ways how we can purchase or how we can participate in those businesses. Stock investing. They are all giving stocks. If you look at most of the leading businesses in India, take it from Tata, Birla, Ambani's, Reliance, or Adani's, they're all giving shares of their companies. When they need money for expansion of business, they'll be giving stocks. So at that time, you can purchase stocks. So think about a situation years back when HDFC Bank, TCS, or Infosys, I'm taking example Reliance, or when they come out with the IPO, initial public offering, if you invested some money, or as and when you are getting the salary, every month you are buying, say, one share of HDFC Bank, ICICI Bank, TCS, Reliance, Infosys, and all, then you will be getting a share of the profit made by these people. So when these type of business houses, they are making money in way of their business by way of becoming a shareholder or a shareholder or a stockholder or a part owner of shares by way of owning a couple of shares only, you will also get a share of their profit. How you will get the benefit out of the share investment? You will be getting dividend if the company is giving shares, bonus, or you will be getting capital appreciation. A share purchased at 10 rupee, gradually it will go to 10, 15, 20, 21, 100, 200, and so on. So like that, you will be getting capital appreciation. So this is one way of for a middle class person to participate into businesses. You can purchase stocks of different companies and make money. But how to select the stock? This is a very, very important question. It is not everybody's cup of tea. I mentioned here junior and senior. It is for Ambani's. Think about a situation years back when Ambani brothers split. There were two Ambanis, junior Ambani and senior Ambani. So mother, with the help of outsiders, divided the entire Reliance empire almost equally between both the brothers. Both were equally smart. Both were educated. Both were equally smart. So both of them get some companies. Junior got some companies. Senior Ambani got some companies. Now think about a situation: a person, a typical investor like you and me, who invested with the senior Ambani, they made a lot of money. Those who invested with the junior Ambani, they lost almost everything. It's not that you will not be making money in the long term, but as on date, this is a situation. Who invested with the senior made money. Who invested with the junior Ambani lost the money. We don't know who is going to be the next junior or senior. If you look at the entire investment spectrum in India, look at just go to Google and check for Birla. There are hundreds of Birla group companies. Look at the Ambani. There are many Ambani group companies. Some of them are listed, some of them are not listed. Go to Tata. So many companies. So where we will invest? Who is a genuine company? How we know whether this is Kumar Mangalam Birla company or some other Birla company? We don't know. We don't have the knowledge or expertise. We don't have the time. Let us think about an IT employee where you are working from 9 to 9 or more than that, where we have time to get into this type of business. We don't have time. So stock investment is really a good way of making money, provided you have the time, skill set, and the ability and the capacity to select the right stock, purchase at the right time, and sell at the right time. But it is not everybody's cup of tea. So I don't recommend this for everybody, because I know people, instead of TCS, somebody invested in Silverline Technologies years back. They lost everything. Instead of HDFC Bank, somebody invested with Vijay Mallya. What happens? Everybody knows. So somebody invested with Junior, somebody, they lost money. So we don't know what is going to happen in this sector. So I will not recommend this, but there's a solution. This is a solution: mutual fund. This is where we can all try. This is where I am investing for the last 20 years. What will happen in the case of mutual fund? Let us say you are giving 1 lakh rupees to a mutual fund investor of a diversified mutual fund company, mutual fund. So when you give that 1 lakh to a mutual fund investor, the mutual fund manager, who is an experienced person with a 15, 20 years of minimum stock selection experience and research experience with IIT, IIM qualification, he is investing your 1 lakh across 50 to 60 company shares. So along with a lot of research. So he's having a very good research team in his company. The research team is selecting companies, stocks, sorry, and the fund manager is investing the money into those stocks at the right time, and they sell at the right time, and they purchase at the right time. So they diversify. Here we are going and putting money into one HDFC Bank or one Ambani or one TCS. Here, when we give money, the fund manager, after careful research, he is investing your money across 50 to 60 companies, whereby it is diversified. It is diversified. So here you can be a zero or a hero. If you invest in a good company, you can be a hero, or you can be a zero also if you go to wrong company. Whereas in the case of mutual fund, you will not be a hero or a zero, but you will never be like this 5 to 6%. You'll be much better than this in the case of mutual fund. So here it is diversification. Now, why the fund manager is helping you? Is he doing it for charity? No, he is doing his business. What he is getting, he is charging around 1% fee. Or in simple terms, I'm talking about a direct plan where there is no agent involved. The fund manager is taking around 1%. Fund is taking around 1% as charges. So, in simple terms, when you give 100 rupees to a fund to invest in a diversified equity fund, the fund house is charging around 1% as fee. Means when you give 100, 99 rupees is invested, 1 rupee is taken as his fee. Quite reasonable. I feel it is a very reasonable thing which a middle class person can do. Instead of taking risk with 100 rupees, put the 100 rupees in a mutual fund, let 1% goes to the 1 rupee goes to the fund manager, balance 99 will be invested with a highly regulated investment. In India, the mutual fund industry is highly regulated. I know it's highly regulated. Of course, there are one or two incidents which is reported here and there even recently, friend running and all. It will be there because we are a country like India is a country where corruption is in our DNA. So we can't, nobody is exception for that. So when we have 100 people doing the fund management, there will be one or two black sheeps which you can't avoid. But we can't generalize also that. But believe me, mutual fund is a highly regulated entity, highly improving also day by day in terms of regulations. So where middle class person can make money. So mutual fund is the way for make money. But again, the product has been complicated to make common man very much difficult to buy a mutual fund. That is where our Indian people are good. We make things complex so that always there is a need for someone to suggest. When somebody is creating a law, income tax laws are created. Next day, the chartered accountants lobby and they will come out with the exclusions and all so that a normal person cannot do things without a CA. Like that in the case of mutual fund also, they are trying to complicate it. Let us see what are the complications. They will say, don't go to an old fund and invest because in an old fund, if you go and invest, net asset value is 200 rupees. Whereas if you go and invest in this new fund, you will get a unit at 10 rupees. So common sense, always believe that, okay, buying at 10 rupees is better, so we'll go and buy at 10 rupees. But what is the catch? It is not good. So 10 rupee NAV means it's a new fund where there is no track record. It is going to perform or not, there's no guarantee. Whereas 200 rupees fund is having a track record of 15-20 years. This also started with a 10 rupee long back and slowly increased the value, and now the value has become 200. That means it is a qualified fund which has done good in the long term. So you should not invest in this 10 rupee fund. You should invest here only. Even though you are getting lesser units here, there is no relation between number of units. When the fund performs, this fund will give good returns. So don't invest in NFO. NFO means new fund offer. Another thing, we can see advertisement by mutual fund companies. We are declaring dividend next week. Invest now. Do you think your mutual fund company is interested in giving you some money out of the way and giving full page advertisement in the paper, inviting you to invest before the dividend rate? Otherwise, you will lose the money. Even our parents don't do that. So don't think that you will get anything free. If there's anything they are offering, there's a catch in that. Do it. So when they are telling they are going to give a dividend after a particular date, they are already idealized. People should rush and invest now. What will happen to dividend? Let us say the fund value, net asset value of a fund is 100 rupees today. The next day they are declaring a 5 rupee dividend. Next day the 100 become 95. That means dividend is nothing but they are giving your 5 rupee from this 100 to you and then reducing the 100 to 95. So that is a dividend option in mutual fund. This is a catch. Don't invest. Closed-ended funds are better. Again, this is a wrong myth. It's a myth in this circle. What is a closed-ended fund? Some mutual funds allow you to invest whenever you want. You can withdraw whenever you want. It is called open-ended funds. But there are some funds which will say you can invest only during this period and then you cannot invest and you can take it only at this particular period. Otherwise, you cannot take it out. This is called closed-ended funds. The mutual fund, some distributors and some banks will say these funds are better. Why? They give some slightly high commission. Actually, it is not good for you. Open-ended funds are good. Another important catch, agents are not getting any commission in mutual fund. That is what people are telling, especially the agents between mutual fund and insurance. There's a fight. So these agents will say we don't get any commission. Commissions are only in insurance. That is not correct. There's a catch. I will explain this in the coming slide. Then the insurance agents. Insurance agent will say mutual funds are risky. Even I seen a brochure yesterday run by an insurance agent. They are telling mutual funds are risky. Don't invest. That is what they are telling. Is it right? No. Mutual funds are risky if it is for short time. Mutual funds are not risky if it is for the long time. So you should know where to invest according to your risk profile. That is very, very important. This is the reality. The 10 rupee fund I told you, it is like a new fund offer. It's like a fresh MBBS doctor just passed out from the medical college. He wants experience. So he is waiting for the guinea pig. to experiment. So don't go and invest in a NAV, sorry, NFO, new fund offer. Go to experienced fund, which is there at least for 10-15 years. Dividend is part redemption. Don't invest in dividend option in mutual fund. Go for growth option. In closed-ended funds, agents are getting commission upfront, so they will push them. It is not because of your interest. What is the commission now? Let us come to the commission. Insurance agents are get commission on the premium. So if you are paying 10,000 rupees premium in an insurance policy, the agent is getting commission only on the premium, not on the growth. But mutual fund agents are getting it on the accumulated amount. So you keep on investing 10,000 rupees every month, then your money grows, maybe into lakhs or into crores. Then the agent is getting almost 1% of that as commission every year. Yes, what I said is correct. They are getting almost 1% of the money from your account every year as commission. That is called a trail commission. Okay. Whether you make the money or not, they are getting commission. Think about a example of 10,000 rupees systematic investment plan for 20 years in mutual fund. The agent will be getting roughly 4 lakhs in 20 years. When you are investing 10,000 rupees premium mutual fund for 20 years, regularly every month, the agent will be getting close to 4 lakhs in 20 years. Whereas in the case of same 10,000, if it was going for an insurance premium, the insurance agent will be getting only 1.56 lakhs. But what is the difference? When you pay this type of investment, the insurance agent get this commission almost everything in the first 2-3 years. Then he is getting only less commission. Whereas it is the reverse in the case of mutual fund. He will get very small commission in the beginning years, then he will start getting more in the subsequent years. So here agents get commission at the beginning, here agents get commission in the later part. And because of that, the agents will make the pitch accordingly here. The insurance agents or the banks, they will ask you to get out of the existing policy and go for a new policy in the case of insurance, because you will get the high commission from the new policy. Whereas a mutual fund agent will never allow you to get out of this investment, even if it is underperforming, because he will keep getting commission here in the long term. These are the catch. You should understand it and then decide it. There are some good agents, of course, in both insurance and mutual funds. I'm not generalizing it, but this is what is happening everywhere, majority. And especially the banks, when they're entering into the field, these banks are spoiling the name of some of the very good agents whom I know in both the sectors. There are very good mutual fund agents. There are very good insurance agents also who are putting interest of the clients upfront. But the way the industry is going, it is in a very bad shape now. SIP is better for long-term savings. I told you, SIP means systematic investment plan. It's an example. Somebody who invested in the last 20 years 10,000 rupees per month in Aditya Birla Sun Life equity fund has created around 2.15 crore. This is data last year, so don't confuse it with today's. After this market crash, it will be slightly less. So that means he invested around 24 lakhs in this 20 years. He invested 24 lakhs. Out of this 24 lakhs, 10,000 has been in the last month. He was investing only 10,000 every month. Not a big amount, but he invested 10,000 per month for the last 20 years. So out of this 24 lakhs, he is sitting at a value of 2.15 crore now. The name of the fund is Aditya Birla Sun Life Equity Fund. Don't think it is a recommendation, because this is not a good performing fund now. Okay, so I taken it because this is one fund which is in existence for the last 20 years. So this is the data 1 year back. I not updated it, sorry. And the CAGR, compounded annual growth rate, is around 17.5 for 20 years. Now, if you take it, maybe only around 15%, but still it is 15%, not 7 or 8% like in the case of bank deposits. So in the last 20 years period, you would have received a return of around 15%, even after factoring the latest market crash. So this is the advantage of mutual fund SIP. You invest small amount every month, consistently, irrespective of the market level, and you get a good return in the long term. Now coming to the direct plan here. Here again, like I told you in the beginning, in insurance you can purchase without an agent. Mutual fund also it can be purchased without agent. It has come from 2013. Now we are going to complete almost 9 years over now. Direct plan of mutual fund. So what will happen? If you invest in a mutual fund without an agent, it is called a direct plans. If you invest in a mutual fund through an agent or a bank, it is called a regular plan. All funds are having both this category, direct plan and regular plan. So if you are investing in regular plan, you are losing around 1% every year of your value to the agent or the bank. Otherwise, you move to direct plan so that you'll be able to save that. No agent means no commission. So here in the previous example, I was telling you about 2.15 crore. Now, it's the same fund. If you have invested 10,000 in the same dates without an agent, instead of 2.15, you'll be getting 2.15 crore. How much? Around 18% more. That is 35 lakhs extra. So where the money has gone otherwise? So when you are investing this through an agent, This 35 lakhs is shared between the agent and the mutual fund company. So this is the difference between a regular and direct plan. So don't invest through agent or bank, invest through direct plan if you are able to identify the right fund. Otherwise, continue to invest even with your agent or bank. At least it is better than your FD or RD. There are many online platforms which allows easy investing in direct plan. Not like the olden days where you have to go fill up a 30-page document and all. It's very simple now. There are a lot of online platforms available where you can invest online under direct plan without any agents. Now, there are some facts about early investing. Power of compounding. I know all of you are aware of it. It may not be applicable to people in the age of 40, 45 now because you're already late. But at least you can tell your children that if you start investing 10,000 rupees per month from the age of 25 in an equity fund, then assuming a 10% return, just a simple formula only, in 35 years, he will be creating 3.4 crore. So his investment will be 42 lakhs. So 42 lakhs investment has grown to 3.4 crore. So almost 3 crore is the profit in this 35 years. Investment is 10,000. But if he's not investing from 25 years, and if you start investing at 35 years, then to create the same 3.4 crore, he has to invest 28,000 rupees per month. Instead of 10,000, it has become 28,000 rupees. He will have the same money at the age of 60. So he will be investing 84 lakhs totally. So 84 lakhs become 3.4 crore. Okay, unfortunately, he's not starting at 35. He's starting only at 45. Then what will happen? He has to invest 85,000 rupees per month. That means it has become almost beyond our budget. Only if he invests 85,000 rupees per month, he will have 3.4 crore at the age of 60. So in this 15 years, he will be investing 1.5 crore. And then only he'll be getting 3.4 crore. So it's only money is not only doubling. But here you see the factor. Only 42 lakhs has become 3.4. That is called the power of compounding. So tell your children to start an SIP right from the first salary. Systematic investment plan. Just explaining what it is. What is systematic investment plan? If you register for a systematic investment plan of 10,000 rupees in a particular fund on 5th of every month, example, mutual fund company will take this 10,000 rupees per month on 5th of every month without your permission. You are giving a mandate. Then every month on that particular day, 10,000 will be debited to your account and you will be getting an account statement within 2-3 days. So this encourages discipline in investment. Unless or until you get into this habit, it will be very difficult for a common man to save. Let me tell you, because I was also a salaried employee for 20 years. I know whatever may be the salary, when I was getting 10,000 or even 1 lakh, situation was same. That is the way a middle class person run. There are a lot of expenses. So unless we get into automated way of investing, it will never happen. Some people will say, I don't want to go for SIP. I will invest on the market fall day. There are very smart people who are doing like that. They will wait for 30 days to find out when the market fall the maximum, and they will invest only on that day. Okay, let us say you are doing like that. Even if you continue to do that, after 20 years, when you look back, see the difference will be hardly 1 or 2% difference. Back tested data is there. So don't worry about all those things. The day you are getting salary, next day or next day, let the money go to the investment. There's the best way of doing it. Compulsory savings, discipline investment. So this will create big money in the long term. The only thing which you have to do the paperwork before starting a mutual fund investment is a KYC. Know your customer. It is nothing but just submitting your PAN, Aadhaar, and a couple of photos to the mutual fund office. Either you can do it in mutual fund office, or there are registrars like CAMS. You can do that, CAMS. Or now there are some website like Quora allows you to do it online through video KYC. Even this is possible. Even people, some NRIs, they are able to do this. Some countries are allowed, some countries they are not allowed. Once the KYC is updated, you can do investments in all mutual funds online under direct plan. Or the worst case scenario, if you don't know anything to do all those things, just to go to your bank, tell that I want to invest say 2,000 rupees per month in a mutual fund. They will do the KYC. They will make the investments, thinking that you will be doing all other investments through him, through the bank. Then the bank will do the KYC. After that, 15-20 days, you will be able to start all other SIPs online through many platforms, including Quora, Investor, MFU. There are so many platforms available there. So get the KYC done, then it is fine. KYC done with any agency, either through any of the mutual fund, it is applicable across all fund houses. So it is not a fund specific, it is a generic one. So once the KYC is there, you are free to invest in all mutual funds online without any distributor, without any problem, without any paperwork. Last 15 years, I have not gone out of my house or office, make any investments. Everything is online, 100% online. So let us stop with the mutual fund part there. Now let us get into other products, which are also equally good. Public provident fund. Most of the people think that it is a 15-year term, and so it is not a good scheme. To be very frank, this is the only product which we can inherit from our parents, because still it is tax-free. This is a 15-year scheme where you can invest 500 to 1.5 lakhs in a year. There is no compulsion. Not like the earlier insurance policy where you have to pay the same premium every year on the same date. Here, you can invest any amount between 500 to 1.5 lakhs per year according to your convenience. And you can invest 1 to 12 times in a year. You can pay in one stroke 1.5 lakhs, or you can pay every month, or you can pay quarterly as you like it. Only constraint is that you cannot invest more than 12 times. That means every month you can invest a small amount. The 15-year scheme, which can be extended till 5 year, 5 year, 5 year, you can extend till you live. Say at the age of 25, you are taking, at the age of 40, it is maturing. You can extend it for the next 5 years, then 5, like that. You can continue even after retirement. This is the only product which we can continue even after retirement as tax free. So I got a couple last year as client. Both of them are having 1 crore in PPF. So I will say that is the best retirement life a person can ask for, because this entire 2 crore is going to be tax free for their life. They are not going to pay any tax on this 2 crore when they withdraw. So what they do, every year one withdrawal is allowed from PPF. They keep on withdrawing, they are spending, they're going on vacation, they're enjoying their life. So even after having 2 crore in the asset, they don't have any tax benefit, sorry, tax liability for that money in future. That is the advantage of PPF. So ask your major children also, open an account in their major children, but don't open it for minor children. Then the limit of 1.5 lakhs is clubbed with you. You cannot invest more than that. So don't go for that. NRIs cannot open new PPF, but you can continue your existing PPF for the first 15 years. So if you have an idea of going abroad, then become NRI. Before that, you open a PPF. That you can continue for 15 years. But after 15 years, if you remain to be NRI, then you cannot extend it. Yes, about the PPF. I will recommend this product, one of the best thing. So all husbands, wife, even if the wife, housewife, can have one PPF, because this will help you in the long term for rebalancing. When you want to reduce the equity and increase the debt when you are nearing the retirement, this will come handy. So 2 PPF in a family, I will say it's absolute must. Suganya Samardhi, those who are having daughters in the age group of 1 to 0 to 10, just one daughter to 10 years. This is a scheme which all of you can invest. Actually, it is meant for people below the middle class thing. Government has introduced as a social security measure, but it is not limited to them only. So being middle class people or even upper middle class, this can be done by anyone. So those who are having a daughter less than 10-year-old can invest 250 to 1.5 lakhs every year in it. And this also tax free on withdrawal like PPF. This is another ideal scheme which is planned mainly for daughters' marriage, because there are withdrawal restrictions in this. For higher education, you can withdraw only 50%, but if it is for marriage, you can withdraw the full amount. So this also can be in the portfolio. Not only for daughters' gold, you can be part of the debt portfolio, because this is also giving higher return than the FD and all, and it is totally tax free. This PPF and Suganya is absolute must for a middle class family. Chit funds, gold investment. Now there is going to be tricky investments. Till now I was talking all about good. Avoid a private chit. Friends are joining together, starting chit, or small jewelries are doing most dangerous thing. They can be risky. I know many people are losing their money. Of course, there are some established brands. They are doing it for so many years and all. There you have to take your luck, because even big names are going out. But there are some state governments who are doing it. Okay, anyway, being a government scheme, it is good. But of course, chit can give only return matching that investment. It's a debt product. Huh? Gold investment scheme of jewelry, again, highly risky. I will not recommend this scheme at all, even if it is going to be from the number 1 jewelry university, because we don't know the financial situation of a jeweler till the time they shut their showroom. The big names from Mumbai, Hyderabad, are all gone out. Even people, jewelry which are there for 100 years and all, they're closed down. So it is a very big risky. Don't go for that. Sovereign gold bond is the best scheme now to invest in gold if you want. Sovereign gold bond is issued by RBI 3 or 4 times in a year. They are issuing. It's an 8-year scheme where you will get around 2.5% interest on the investment, and you will be getting the return of gold, which is totally tax free. So if you keep it for 8 years, if you invest 1 lakh now, you will be getting gold equivalent to 1 lakh. And for that 1 lakh, you'll be getting 2.5% interest. That interest is taxable, of course. But after 8 years, you'll be getting equivalent value of that many grams of gold after 8 years. That means your investment was actually in gold. You are getting gold return for 8 years. And whatever capital gain you are getting is totally tax free. So I will say, if you want to have an exposure in gold, SGB, sovereign gold bond, is a good way to invest. So only thing, it is not available always. RBI is issuing 3-4 times in a year at the time. You have to purchase, you can purchase it through your bank also. Make it simple. Always there's a belief people want to make things complex. Just only to make their commission guaranteed. Otherwise, it is not. Always make things simple. Identify the financial goals. It is very, very important. Some people will say, I don't know what are my financial goals. What are the financial goals? Retirement, of course. Children, higher education, marriage, buying car, buying house, whatever it is. Quantify it then start investing in the right mix of equity and debt. Avoid complex financial products. Simple products are better. Invest in 3 to 4 equity funds on a monthly basis for the long-term goals. SIP is better, we already told you. If you cannot invest, if you don't know how to select the right 3 to 4 equity funds, and if you are not ready to go to any planner, financial planner or something like that, you don't want to pay the fee, at least start investing in the index funds. Even this is better than RD, chit and all those things. Just to invest in a Nifty index fund every month, at least you will get a market return. Invest in RD, FD for short-term goal. If your goal is less than 7 years, don't touch equity. Go for only this, RD, FD or debt funds. Avoid too many properties on loan. It's a very, very important thing. This is, you have to correlate it with the first slide, where husband don't involve wives in the discussion. If the wife don't know the financial situation of the husband, what will happen? They will ask you mainly by peer pressure, family pressure, to purchase again another property to be on the safer side. I am aware of an NRI person whose job is at Sheikh, is struggling with another health issue. Wife is again asking to buy another house. Why? Wife don't know his exact financial position, and he is unable to explain it also. And when you are buying too many properties, believe me, it can become a liability for your children. I'm talking about in light of a client in Pune, my client, who's having 3 property, only son is in US, is not even ready to come and register a property in his name. I'm telling a hard fact. The other day I was joking to my wife. I think some of my clients may gift some property to me, because there are some of them are having that much properties, and they are not even, the children are not even coming that side. They are not even bothered about what it is. So don't invest. If it is in this Pune person, poor man is planning to sell one by one and putting the money, converting from his account to the children's account. That is what is going to happen. He's having one son and one daughter who's married out. So parents, and think about the situation. These people, how much they would have struggled to prepare this property. This Pune person's example, both husband and wife, they were working. The entire life, they were paying EMI. They were paying EMI through their entire life, purchasing a plot, paying the EMI, again constructing a house, again paying the EMI, buying a furniture, again paying EMI. Okay, all those are over. Again purchasing another property. Like that, accumulated 2-3 properties, and now the children don't even having the respect for the father and the mother, who struggled a lot for their entire life, is not even coming to register the property in his name. So don't create liability for your children. Try to enjoy your life and try to balance so that you will have a decent life for you and enjoy the basic luxuries. Don't save everything for children. Invest before spending. The first one everybody know. If you are getting 100 rupees, after spending 80 rupees, we have 20 rupees balance, we'll invest. That everybody knows. But that is not going to be sufficient, because the world is changing. The investment has to happen in the beginning. So once you identify the goals, the investment has to happen in the beginning. So when you are getting 100 rupees as income, if you have decided 30 rupees to go for investment, invest that 30 first, then only keep that 70 for expenses. Then your life will be fine. Otherwise, what will happen? If you think that you can invest at the end of the month after meeting all expense, nobody will have money. I'm telling you, I myself was going through that phase. I know that. Invest regularly before spending and make it a habit. Create a habit. Habit is the best thing to develop in life. Good habits, whether it is health, morning walk, evening walk, annual health checkup, SIP, these are PPF. These are all some of the good habits which a person can create in their life. Some of them are good for health, some of them are good for financial health. Don't live as if there is no tomorrow. I add this sentence. I have a client who's earning 3 lakhs per month. You don't have even 30,000 to invest. I'm talking about a person in Mumbai. Both husband and wife came to my office. 3 lakhs, no money to invest. Everything is spent. Having 2 daughters. God only knows how he is going to manage. Same time, the other extreme. Don't miss the basic luxuries that I already told you. Don't miss the basic luxuries. Because whatever you can enjoy now at the age of 40 or 30, you cannot enjoy at the age of 60. So try to make a balance. You should have your basic luxuries. Don't save everything for children. Same time, don't live as if there is no tomorrow. It is the basic. You have to be in between. Nomination. It's a very, very important thing. People will be laughing at me when I'm telling this. You go to the website of any bank or insurance company, search for unclaimed amount. In India, unclaimed deposit and insurance money is running into crores, thousands of crores. I'm aware of some people who died without any nomination, having 3-4 crore. Now, children are running pillar to pillar to get some money. Share certificate in physical format. Some teak plantation certificate last week, my client sent me. His father-in-law died with all those things. These are all common. So whenever you are making an investment, this is a suggestion for the husbands or wives if they are working. Whenever you make even 1 rupee investment, ensure that you fill up the nomination form first. That column, make it clear. If you're a husband, nominate the wife. If it's a wife, nominate the husband. There ends the matter. We can avoid so many complications if you do this, but very few people do it. I'll ask agent to fill, he will not fill it correctly. Then when there's a claim comes, there's a problem. When there's a death, there's a problem. People are running. It is not easy for a person in India. If there's no nomination, getting money is a very difficult thing. It will take years. That's a fact. Just a 1 minute job of nomination will solve all the issue. So this is applicable to bank account, insurance policies, bond, PPF, mutual fund, demat account, property, everywhere. Whenever you invest 1 rupee, make the nomination. Nominate the right person. Don't nominate your mother after marriage in your policy. That can create problem. Okay, when I was a bachelor, my mother was a nominee in my policy. After my marriage, automatically my wife has to be the nominee. It's a typical family way. So you have to change the nomination from your mother to wife. Otherwise, if there is a fight, this can be a reason for them to fight even after your life. So don't create such situation. And let the nominee know about it. Seriously, let the nominee know that these are the things which is there, and let the nominee know about it. You should consider a will if there are multiple properties and if there is a chance of rival claimants. If you are a businessman, if there's a chance of rival claimants or some creditors coming, then there should be a will also on top of nomination. Otherwise, for a normal middle class salaried person, if a proper nomination is there in favor of the right person, there cannot be big fight and all those things. You can avoid much problems. The top priority goal, higher education, marriage, retirement, and all. I'm telling this based on my experience in the last 12 years as a financial planner. Some people want to create 3 crore for marriage of the daughter and 20,000 rupees per month for the retirement. He's thinking that that is sufficient for retirement. No. New generation is going to live 90 years and beyond. There's no doubt on that. Longevity is increasing. Whether you like it or not, hospitals will keep you alive. Hospitals like Apollo, Religare, okay, Fortis and all, they are to make money. So they will make you alive. With ventilator, without ventilator, they will make you alive. A lot of modern technologies are coming. Lifestyle diseases are on the increasing side. COVID is only beginning. We are going to see more. Expenses on healthcare is increasing. My childhood, I have seen about vitamin A, B, and C. Mother used to give supplement A, B, C. Now I have seen vitamin D, which is coming from sun, but it is coming in the form of tablet now. I'm sure all of you are going to see up to Z in their lifetime. Vitamin A to Z. So you'll be having a couple of tablets daily morning after breakfast. All those things at a huge cost. So think about retirement. What is going to be our situation? How many vitamin tablet supplement you will be taking? Standard of living cannot be reduced after retirement. Very, very important. We travel a lot after retirement. Last month, I went for a Northeast trip after 2 years of COVID. 99% of the people were retired people. 3-4 couple were the old man out, not retired, like me. Others were all retired people. And when I interacted with them, I realized these people are traveling once or twice in a year. They are enjoying their retirement. Their standard of living has not come down after retirement. Good. Their children are settled and they don't have much commitment. They have good pension. Most of them are government employees getting index-linked pension. That is not going to be the luxury for you and me. We don't have any pension. And this is a punchline. Your children are not your retirement fund. I'm talking, I have 2 daughters. I don't think I can depend on them. That is a fact. And we cannot expect them. I left my parents in Kerala and I moved to Delhi, Mumbai. 20-25 years I am away from my parents. So can I expect my children to be with me to take care of me at my old age? It is not nice of me to ask her. I know about many seniors in the industry who work with me and all. Parents are alone here. Children are in UK, US and all. Father and mother here. After the death of the mother, wife, husband is alone. Or after the death of the husband, wife is alone. That is the situation. But we cannot expect them to be with us to take care of them. That is not good for us. So don't think children are not your retirement fund. Create enough money right now so that at least we can think about caregiver and all those things. No bank will give retirement loan. You will get loan for anything. If you don't have breakfast, even for that also you will get a loan now. Swiggy will have some type. Zomato will have some type and you'll have EMI. But no bank will give retirement loan because if you want to recover the money, they have to come to the other world. So no bank will give retirement loan. Take it from me. Plan for retirement very carefully. This is a very, very big issue which we are going to face in the next 15-20 years. Because huge migration of children towards other countries, Indians are going to face the retirement issue big one. Nobody is having pension. Nobody is going to have PF because we are withdrawing it in between and spending. Nobody is getting gratuity because we are not working for 5 years in a company. We are changing job and spending. Retirement planning should be the top priority. Next one, higher education or marriage. There can be argument with me. I know certain things are unpleasant truth. Some people want to spend 1 crore money and one Benz car on marriage, Punjab. Somebody in South, 1 kilo gold, 1 crore cash, Tirunelveli. Somebody in Trichur, 1 crore cash, 2 crore worth gold. State to state, the culture changes. I'm not blaming these people. I will not blame. I cannot do that because this is not fair on my part. I'm just telling. But what should be the priority? Do you think you will have a say on your children's marriage after 15, 20 years? I'm talking mainly for the young couples. I don't think we'll have a say. Even after 5 years, we'll be having a say on our children's marriage. Give them good education. If they give them good education, they will get the job at the age of 23, 24. From that age, they will be working for 6, 7 years. And normally, children are getting married only at the age of 30 now. By the time they have enough time to save for their marriage. And we are not going to see this type of fatty marriages in future. We are slowly imitating the Western countries where it is going to be only a family function. Not like in India where we're investing 2,000 rupees, 2,000 people even during COVID, 3 rounds, 4 rounds like that with all government restrictions. That is how we spread all COVID in the last 2 years. So it's all going to change. So don't take marriage of the goal as the marriage of the children as a top goal, but give them good education. What is happening now? Children are aspiring for costly courses, including overseas studies. I've seen many children are going abroad. Even for graduation, they are going abroad. Overseas graduation is very costly. Post graduation is a bit less, but graduation is very costly. So this requires very high investment. So what you should do, whatever you are going to do, you have to manage with our salary only. So when you are getting 100 rupees salary, after spending 70 rupees, think about that 30, where the priority should be. Out of 30, how much should be for higher education? How much should be for marriage? How much should be for retirement? Then you decide the priority and decide. I'm just giving my views. It can be personal. Take it in the right spirit only. Simple products are better. Again, this I used to quote in all trainings. Idli, sambar and roti dal is better. But I realized this only at the age of 50, just 4 years back. Till that time, I was also interested in having some spicy food. But at the age of 50, I realized idli sambar is better or roti dal is better. Even morning, I had roti. Why? It will not upset your stomach. It will give you decent nutrition, everything, and no side effects. Similarly, simple products are better in personal finance, but you will not realize. Till the time you lose money, you will not realize. At the age of 30, if I tell these people laugh at me, they want to go to that cooperative bank, which is giving 1% return. They want to go to that cryptocurrency, which may or may not double. Then 90% of people are losing money. Still, balance people are running behind crypto. So people don't believe in simple products. But to be very frank, this is the best thing. I learned in the hard way. Opt for a recurring deposit for the short-term goals, like a vacation funding, which you need in the next 1 or 2, 3 years. Go for RD or even liquid fund if you are aware of that. Otherwise, then opt for debt funds for a short-term goal, 3 to 7 years. Even 7 years is not a big term for equity. Some agents will say you can double it in 3 years. I don't agree with that. If your goal is in 7 years, go for only debt products. You can have a small amount in equity, but it's not ideal. So go for debt products if your goals are 3 to 7 years. And opt for a combination of PPF, equity mutual fund, if the goal is 7 years and above. Not 100%, but of course, a decent portion, depending on your risk profile. So this is a simple way of making your life easy. Then don't spend more than 1 hour in a year monitoring this. Otherwise, there are some clients for me. Every quarter, they will send a mail to me, 1 page essay. I told one boy, if you send a mail like this, I will not reply to you. This boy is spending more time on this. He can be a good research analyst. Really verifying is doing good analysis also. But a normal person don't require that much of analysis to manage his personal finance. Make them simple. It will make your life simple. Otherwise, it will become miserable. Avoid trading. Buying in the morning, selling in the evening. Till the day, morning to evening, your BP is rising up and down. At the end of the day, selling either 10 rupee profit or 10 rupee loss. What you are going to gain? Nothing. Crypto. Again, dangerous product, I will say, which is not regulated nicely, only taxed only correctly in India, but not regulated nicely. So I will not recommend this to anyone because simple reason, I don't know exactly how it works. Only I know it is using the blockchain technology, but I don't know how it works. So till the time I'm clear on this, I will not invest my money. I will not suggest it to my client also. So if you have 1 or 2 lakhs, if you want to play around. I will not say no, but otherwise don't play with a big amount. You can be zero also. If you want peace of mind, avoid such things from your life. Investing based on stock tips. Recently, one person contacted me telling that he's not getting SEBI license. SEBI is rejecting his application. I went to his website, find out he's giving stock tips. How can SEBI give license to a person as an investment advisor who's going to give stock tips? He's giving daily tips in the morning. Buy this, sell this. So those things are not good for this thing also. Na? So we should regulate. Money doubling in 3 years. You'll be laughing at me. I'm telling even educated people are doing this. I have some clients who are keeping 5 or 10 lakhs for this doubling business. I told them, okay, keep 5, 10 lakhs is fine. Because after losing that money, you'll come back. Till the time, you will never listen to me. Keep only 5 to 10 lakhs. And I told this, tell your wife also so that she should also know that this man is playing this dirty game of doubling business. 90% you'll lose the money and come back. Another tea plantation. It was gone out of the shade. But recently I came to know about a very educated person in Bangalore. He is again invested in this tea plantation. And again, he's invested on cows. And he has purchased 3 cows. And he's expecting that these 3 cows are going to give him 50-liter milk per day. What I should say, I don't know. This is what is happening, even educated people. BTech and MTech qualified person with 10 years experience is still thinking these things are genuine. Investing in a cow, each cow going to give 50-liter milk and all per day. And he's having an excellent chart for this. I told him, I'm not even going to open this chart. You keep it for you, lose the money and come back. People opt for risky investment to get one, but please read this line again. People opt for risky investment to get 1% extra return. This is every day I'm seeing senior citizens going and standing in front of cooperative banks in many states. And what they're advertising, they're giving 1% extra than State Bank of India or anything. What is this 1%? When you are investing 1 lakh for 1 year, this 1% is just 1,000 rupees. So to get that 1,000 rupees, you are risking the entire 1 lakh. It's a big job. You should not take risk with the debt instrument. You should take risk only with equity, because even if the equity crashed by 50%, it has come back. In 2008, I have seen that. My own money has gone down by 50%, but it has bounced back. In 1 year, it has doubled. So you can take risk in equity, but not in debt. So in debt, we have to be very careful. Debt products like FD, PF, PPF, all those things, don't compromise on the security. You go and invest in only in safe banks. Check your parents where they invest. They go to a small cooperative bank to get this 0.5% extra return. 500 rupees per annum extra. They are going and standing in the queue, filling the form even during COVID and all. And what happened? What happened to PMC Bank? Everybody knows. So every year, at least 2-3 banks are going out of thing. Still, people are going for this 1%. So avoid such things. Impulse purchase. What is impulse purchase? Everybody knows it. When see the board sale, when you see the board of sale, we cannot control the emotions. Just to go and purchase whatever is shown there. Amazon, Flipkart sale is always going to be there. So I always believe you should purchase what you want, not what they want to sell. If you follow this principle, your life will become simple and easy. So every day you must know what you want to purchase, and that you purchase from wherever there is a sale or not, no problem. But if you go to a sale and purchase whatever they are trying to sell, life is miserable. That is why I'm telling you that 3 lakhs person every month is getting 3 lakhs is spending. He's frequent visitor in all sales in Mumbai. Avoid imitating others and purchase things which are not within your budget. This leads to financial burst. You have seen now lot of suicide cases reporting even from the highly educated state like Kerala, Tamil Nadu and all. Why it is happening? Taking all unwanted loans. Why? Neighbor is purchasing a car. He also want a BMW. He purchased a BMW out of his business income, whereas he purchased a BMW out of loan. When the loan is not paid, bank will come for seizure. When the bank is coming, they lose their reputation. Then the best thing is family suicide. Every day we are seeing at least 1 or 2 cases in India. Why this happens? Try to live within the means. See, it's not that everybody cannot be Ambani family. Everybody cannot be Adani family. So we should all, middle class people should try to understand the limitations and try to live. I'm not telling that you should aspire for those things. You should aspire. Same time, you should earn for it, work for it, earn it, and then purchase. Not go on EMI and all. Children are watching. Again, being a father, I want to tell you this. That's why for the young people. Children are watching you. You are giving lot of books for them to learn. They will learn, no doubt. But they will follow your lifestyle and spending. It's very, very important. Some people are thinking that whatever books they are buying and for children, they are studying it. They will study this, but they will study more on your lifestyle and spending pattern. If you are doing this every month, you are spending everything and then not investing everything, they are also going to follow the same thing. So you are spoiling next generation also. See how we lived the last 2 years during COVID. I don't say you live like that, such a life. I don't like it also. Let it not come. But try to avoid some unwanted expenses. You should know where to live. You should spend decent, same time, you should save also. Credit cards. Another very, very useful tool, I will say, same time, dangerous thing. Why useful? I believe there's a need for one credit card for everyone because it helps you in managing payments without carrying cash everywhere. 22 years, I'm using a card. I don't use cash at all. I always pay by card, but 1 week before the due date, I'll pay the full amount. There's no need for too many cards. Some people are having too many cards. Again, danger sign. Don't purchase anything unwanted just because you pay using the card. This is where people mistake. Always think that you have to pay the bill. This is the important thing. In credit card bill, there will be two options. One is minimum amount due, total amount due. Credit card company will be happy if you pay the minimum amount due. They will never be happy if you pay total amount due. But always be in this. If you pay minimum amount due, you are entering the credit card trap. What will happen? Next day onwards, the entire amount is attracting 36 to 48% interest. 36 to 48% interest. Whereas you are struggling for 5% in FD, your interest on a credit card balance will be 48%. If you pay minimum amount, you are entering the credit card trap. Always pay the total amount due 1 week before the due date. So this is what I do. If my bill is 12,102.57, I'll pay 12103. Rounded off to the higher rupee, pay it 1 week in advance. If you pay the minimum amount due, balance amount will attract this rate. Cash withdrawal. Don't withdraw at all cash from the credit card. It is attracting the high rate from the day one. Annual health checkup. It has nothing to do with the finance. It's with the health only. After age 50, at least consider a health checkup in your own interest. It is worth the cost because it will help you in early diagnosis of so many health issues which you can change in your lifestyle. Similarly, an annual health checkup of your personal finance is also a must. This is very, very important because this will help you in taking stock of where the family stands in terms of family finance, whether we are having a lot of loans or whether we are investing properly, whether the insurance premium has been paid. All those things has to be done during this annual checkup of personal finance. This is an opportunity to make changes. If the loans are on the higher side, then you should make changes. Or if you want to invest more, you should make all those things. This is a must. So after March, every year in April, spend some time, 1 or 2 hours, update everything. Update all personal financial details and share it with the family, including grown-up children. I have given the heading this, what your family must know. I have written an article in my website, FinWin, Personal Finance Emergency Kit. Update it every year and share it with the family. I do it in April every year so that my wife and children know where I stand. If tomorrow I am not there, they can assess and they can at least enjoy my savings. Otherwise, what will happen? It will go to government. I don't want to do that. Please think about your family. Do it in your own interest. It will not take more than half an hour in a year. Update everything. Share it with your family. And the list should contain the contact number of everyone. The insurance agent, mutual fund agent, financial planner, CA, lawyer, family doctor, landlord, tenant, etc. So that it will make life easy for your family if something happens to you. Maintain all records in a format you are comfortable with. Format you are comfortable with means what? Format your spouse is comfortable with. Can be notebook. I always maintain a diary. Some people will maintain Excel, which can be used by your spouse and family in your absence. Avoid complicated Excel. You are an Excel expert, that I know. But don't show your Excel skill on this document because your wife will never be able to open it. I'm aware of a person at the age of 60 is maintaining a very complicated Excel, and even the desktop password itself is very complicated. So if something happens to him, even his spouse may not be able to open the desktop itself. Forget about the Excel. He put that many Excels and passwords, very complicated passwords. So for this at least, it can be even a notebook. In my case, it is a diary because I'm sure I don't want to get into some complicated. I don't have good Excel skill. I maintain. Some people who are spouses also equally good or smart in Excel, do that. No problem. But whatever is comfortable to the spouse should be the medium. It can be notebook or diary, whatever it is. SMS alert, online fraud. If you lose, you are getting a message telling that 10,000 has been debited from your account. How many of you know how to handle this? How many of you know how to block the card immediately and where to complain? How to go online and complain and enact or change the password or deactivate the online access or report to the bank, report to the police? So ensure that your spouse is aware of it. Online fraud is increasing daily and innovative. They are very innovative. Activate SMS alert in all banking credit card transactions so that the moment 100 rupees is spent from your card or bank, you will get an SMS alert. Immediately you can find out and take remedial action. This helps alert on all transactions. Don't click on any links. Very, very important. Nowadays, a lot of links are coming. 10 crore credited to your account. Pay just 50,000 as bank jar like that. Last month, I got a mail from Asim Premji. He credited only 10 crore to me every day that morning. So he's telling you are doing so many good things. I want to credit 10 crore to you. Together we can do some philanthropic activities. I never replied. I just took a screenshot of it and shared it in Facebook with all friends, clients and all, so that they will also be aware of it. But if I click on that link, that's it. Maybe my system may go, virus may be there, so many things will be there. But maybe me asking some password and all those things to credit this 1 crore out of 10 crore. If I am clicking, I am lost everything. Don't share OTP with anyone, including the bank employees. Change password regularly. Don't put this type of password 1, 2, 3, 4, 5, 6 and all. Don't put your daughter's name, child name, wife's name, and all those things password. Those things are all easily hackable by anyone. So put strong passwords and keep changing passwords once in a while so that nobody can enter into your area so fast. Sure, you are confused, lost. So many things I discussed. Don't worry. This is the reality. You are discussing with your agent regarding your retirement planning. At the end of the discussion, you realize the agent was discussing about his retirement planning. Why? By purchasing this type of insurance policies or the product what they are selling, the agent is ensuring his retirement, not your retirement. This is what is happening in most cases. So you must know where you invest rather than just blindly believing the agent. Actually, this is the way it should be happen. A proper financial planning should be like that. Instead of simply listening to agent and buying, you should have an analysis of life and health insurance. What type of insurance you should buy, what type of health insurance you should buy, and what type of mutual fund and investment you should do. This is what I am doing in financial planning, helping you to identify your financial goals, prioritizing it, matching the current investment with the goal. You have some amount that can be prioritized for certain goals. Balance has to be managed. Proper asset allocation. That is, there should be a mix of equity and debt. There should not be 100% debt, 100% equity. You have should have both. Various investment within each asset classes, index funds, multi-cap fund, mid-cap fund, etc. PF, PPF, debt funds, all those things. Suggestions for best life and general insurance, not the best and life general insurance beneficial for the agent, which is beneficial for you. Optimal way of tax reduction, how to reduce tax within the tax laws. Proper retirement planning. This periodical review and rebalancing. Very, very important. Once in a year at least, do the review, make changes in terms of funds, in terms of rebalancing, reducing the equity, increasing debt. This is what is required for a middle class family. This is what is covered under the financial planning. Instead of some uncle, auntie coming and selling some product where he is getting a commission. Don't do that. It's about my firm. I don't sell any financial products. I'm a fee only financial planner, certified financial planner, SEBI registered investment advisor. I feel happy to see your money growing because at the end of the day, if I see you smile, I will also be happy. Unbiased advice at affordable price. There is a motto for me from the day one. I made my fees one of the lowest among the many planners, and I want to be like that only. I'm increasing my fee just 1,000 rupees every year for the new clients and handling large number of clients and making it affordable to the middle class because I want to reach out to the middle class and only to the middle class. That is my motto. Now it's a question answer time. Thank you. So Ajay will release you, we will unmute you so that you can speak. Anybody
Raise
want to
their-
raise the hand?
Anybody wants to ask the question, please raise the hands. I'll unmute one by one.
One thing before that, if it is a specific question related to your health insurance policy or life insurance that I applied for this policy because of this problem, it is rejected. Such things can be through email. So if you have any such queries like that, which will not be useful for the other majority of the participants, you can email me at this email ID, melvin@finmin.in. I will try to reply in a couple of days' time. Other than that, if you have a generic question which will benefit other members, that you can ask now so that it will be beneficial for everyone. Thank you. No questions?
Unmuted Koluru. I'm unmuting the second one. Just wait a second.
Yeah, Koluru, you can ask the question. No questions.
Wait a second, sir. I'm unmuting.
Yeah, sir.
Diksha, you can ask your question. Diksha, can you hear me?
I can see 10 people raising hands.
See, you can ask your question.
Hello.
Yeah. Who is this?
Yes. Sir, thank you so much, sir, for this session. It's really helpful for everyone, not
Thank
only for
you.
a housewife.
Thank you.
Sir, I have a question related to tax liability
Sure.
on guild fund. So you never covered that topic, like tax liability on the mutual fund. This is
Okay.
the untouched topic for me.
Yeah. Because it's a very lengthy topic which you can't cover everything. Even now, it is going to be 2 hours. People will never be happy on a Sunday like this. The taxation on guild fund, all are coming under the category debt. If the mutual fund is investing in equity, that equity mutual funds are taxed different, and other than the equity funds, all are taxed as non-equity funds. So whether it is a gold fund or it's an international fund or it's a guild fund or coming under the debt category. So the taxation rule is if you sell within 3 years, the gain is total treated as a short-term gain. It will be taxed as per your slab. That means if you are investing in it now and you are selling it within 3 years, whatever may be the gain, let us say you are getting 20,000 rupees gain, that 20,000 rupees gain will be taken as your income along with your salary, and you have to pay tax on that gain. But if you are selling it after 3 years, the gain will be treated as a long time capital gain. Then the gain will be taxed at 20% after indexation. So indexation is a way the government is allowing for you to give benefit of inflation. So in effect, if you calculate the 20% after indexation formula in the current condition with whatever value they are declaring every year for indexation, cost of inflation index, you will be paying around 15% tax on the gain in the case of a debt fund if you sell after 3 years. The rule is 20% after indexation, but net you'll be paying around 15% tax on the gain. That is about a guild fund, which is also a category within debt funds. Okay. Clear?
Yeah, thank you, sir. Thank you so much.
Okay.
Amika, you can ask your question.
Hi, good afternoon, everyone. Thank you, sir, for the session today. This is Anamika. And my question is according for the retirement plan. So suppose like I'm 42 now, and though, yeah, it might be late as I was hearing the conversation, but when we start, I just wanted to know what is the amount we should be in, what is the right way to start, or what should be I will doing it. It could be just an initial advice from your side for people
Okay.
like
Which industry you are working?
T.
IT.
Yes.
I personally feel people who are working in IT sector will never be able to work after 55. Because I've seen people after 50, they are getting tensed with the higher job responsibility, tension, and all those things. They will find it very difficult to cope up with the new technologies and all. So it is always better you to plan retirement by the age you reach 55. Having said that, now you are 42, correct? So you have, in that way, you have 13 years to retire. Correct.
Correct.
Okay, so in this 13 years is not a very long time for investing in equity. Same time, it is not a very short time for investing only in debt. So I will still say, if you're not open a PPF, you should open a PPF, even though it is a 15-year scheme. You should open a PPF now, and you should invest that 1.5 lakhs full in PPF, and balance you should invest in mutual fund SIPs, maybe around 40 to 50% of your investment surplus can go to equity even now with the 12 to 13 year horizon, and then gradually reduce as you near the retirement. So a gradual rebalancing should be helping.
இல்ல 11 பேர் லைன்ல இருக்காங்க.
And how about the
But don't do the mistake of buying a property and expecting that you can live on the rent and all those things. Those things can create problem for you. Try to create liquid assets, which will be helpful for you.
Okay. Thank you, sir. Yeah.
If you have any queries, we can send an email. I will help you further. No issues.
Okay.
Anyone?
Hello.
Debashri,
Yes.
you can ask a question.
Yes. Thank you, Melvin, sir. I have joined this community around 1 year ago. So I have been following all the discussions, and there have been situations I have called Ashal myself. So with time, I have realized that, my income is adequate. I work in IT industry, and I will be completing 15 years this July. So my initial years were like I was enjoying my life,
எல்லாருமே
not
ஐடி
having much
இண்டஸ்ட்ரியில
sector.
நிறைய பேர் ஏஜ் வந்து 42
Can others please go on mute? Yeah. So what I have understood over time, I have my insurance, my health insurance, term insurance, those things covered. I am still not into much of much understanding of asset allocation. But what I have understood is my income is inadequate. So I
Okay.
have been focusing on that area.
Okay.
So do you think I have a decent income? I have two children. My spouse is not that much financially aware. I am trying to make him do so, but he is of the opinion that with inflation, things are getting anyway eaten up. So better I focus on my present. So that is a different story altogether. But
How old
in
are you?
my case, I am a aware parent,
How
and
old are you?
I am 38 now.
Okay, okay, no problem. You have some years on your side. You are not that bad
Uh,
position. Okay, you have
hmm,
two children,
hmm.
correct?
Yes, yes,
And you told me that you have decent income and you have two children. Okay, husband is not
yes,
earning that much. That is your
yes.
concern, correct? So,
He
okay,
is not saving anything for future. That is my concern.
okay,
He is sharing
okay.
responsibilities.
Okay, okay, okay. So if see, I'm telling, I've seen this within many family where
Hmm,
husband will never take any interest. I have a client where husband wife used to come to my office. Husband will sit with the daughter on the other side. Only wife will actively participate in the discussion. I used to make him sit on the side. Now what happened after 2 3 years? Now he's an entrepreneur and now he's running. He don't have any basic fund of finance. He's struggling there. So some people are like that. They will never learn finance in the proper way. But we cannot change them also. We try to change it, will create problem in the family the
hmm.
other way.
Yes,
Okay,
yes, yes.
so you have to adapt to the situation, but ensure that at least his money is spent on the other expenses so that you can save maximum for the benefit of the family. So somebody asks you, take initiative. Either it can be husband or it can be wife. In your case, it is you and only you.
Yeah.
Make,
So what I am
make,
trying to
yeah, make the
what
right
I'm trying
investment.
to correct. What I'm trying to do now is increase my income. And do you? I am just trying to ask about your experience since you have handled a lot of people very closely. So have you seen situations where trying to increase the income has had a not good impact?
No, no, this all depends on how innovative you are. Okay, you are working in IT, correct?
Yes.
You can increase your income only by increasing your professional skills. Number one.
Hmm, hmm,
Number two, your timing should provide because
hmm.
you're having two children, so you have to take care of them also. So after
Yes.
spending time on your household and your family and your day job, will you be able to increase your professional skills by attending some courses and generate that, create that into an income stream? Then that's a big question. I am aware of somebody who's working in Bangalore in IT, is doing an online tea desk selling business and making
Hmm,
money. Same time,
hmm,
I am aware of a person who was working in ISRO earlier, who resigned and started the online tuition for BTech students to make them qualify for MTech. And he's making big money. And then later he resigned the job and became that into full time. Now he's full time into that. But this are equal number of cases I am seeing failure also because somebody took the franchisee of Hyderabad biryani and flopped everything.
hmm,
Okay. So
hmm.
I'm telling you, entrepreneurship is something which should be there in your blood or should develop a taste. Only for the purpose of increasing another 10,000 income. If you sacrifice your day job and do that, you can be in trouble. So it has to be well thought out plan. So in my case, I was dreaming of leaving my job at the age of 28 itself. And then I left my job at the age of 42.
Hmm.
Okay, so I was having a
Hmm.
plan B ready what I should do, and I was not having
Hmm.
any income for the first 5 years. You listen to the last point. I was living on my
Yes.
savings for the first 5 years. After doing this decent job of doing fee only planning, I was eating on my savings for the first 5 years. Only from the
Hmm.
6 years I get some income. Okay, so entrepreneurship is something just be done very carefully, not because just because you need money. That should be the only reason. You should know where to go. What you should develop any of your passion or skill, do an income stream, and then only you can do that. Otherwise, no.
Yeah. So what I am taking away now is have a robust plan and do not hurry and take it slowly
Exactly.
in a well
Without,
organized way.
exactly. Start slowly without leaving the job, without hurting your job.
Hmm,
Start
hmm.
doing it slowly. Only after getting
Can I
confidence,
ask a question?
do it. Yeah.
Yeah. Okay, Melvin sir, I will leave for others to proceed. And Ajay, thank you for pronouncing my name correctly. Thank you.
Welcome.
Thank you.
Diksha, you can ask your question.
She's not there. Last time also you called her name. Huh?
Can I? Malini Balaji.
Yes.
Aditi, you can ask your question.
Yeah, I wanted to know from Melvin sir, like A lot of my family members are working in government service, and they're not worried about anything about investing, doing any mutual fund, any saving, nothing, because they know that they will get a decent amount of pension when they retire, and they will be fine with it. But my husband is working in private sector. We are doing investments regularly, and yeah. So as compared to a government, and Melvin sir is privy to our investment, how it is going and all. As compared to government people and as compared to private sector, we don't have pension. So this mutual fund investments should help us have that kind of security what government people have when they retire.
Okay. So I understand your question. Okay, so knowing you for at least how many years now you are my client?
Sir, 2017.
Okay. When you came first to my office, your children were too small. I think maybe less than 1 year or something. Okay, now they are 8 years or something. Correct?
Yeah.
Okay. So now, let me answer the question. In my family, I am the only person who are not working in government job. My brother, sisters, all are both husband, wife, both are all Kerala government employees. They are all going to enjoy full pension. Not then NBS. The new employees are going to get only NBS. The older employees are going to get an index linked pension. They don't invest anything because both husband, wife, they are going to get commission. So pension, and their parents are also getting. So seeing their parents enjoying their retired life, they also go to government job. Both husband, wife working for a government job, and they are getting the old pension and having enough land and all agricultural income. They need not invest anything because their future is secure because both are going to get index linked pension. But the new generation government jobs, they are getting only NBS, National Pension Scheme. There, that will not be sufficient like the old people. That is point number one. Point number two, what you are going to do now, whatever investment you are doing in mutual funds, equity and debt, all those things will accumulate into a big amount by the time Balaji retire. Okay, maybe at the age of 55. And that amount will be invested at that time into various instruments, including equity and debt, small equity even at the time, and from the debt, you'll be withdrawing on a monthly basis like a pension. So if you continue to do the same investment what you are doing now, you will be able to withdraw slightly higher than what your family is going to get as pension. Don't worry about it. Okay.
I see. So my children are small now. In between, they will go and study. They'll go abroad. They'll get married.
Yes.
There will be some decisions of buying land as a family that we will be doing. In spite of all that, in my family, people are doing everything that they want to do without worrying about anything that they need after retirement. Whereas everything that I do now itself, I have to consider whether this is absolutely essential, whether this is will not affect my retirement security.
What we are doing is right, keeping a private sector person in mind. What they are doing right because they are all government employees, they are getting guaranteed pension. So that is the difference. You cannot compare them. So let them enjoy their life.
Oh,
Maybe getting less salary, less standard of living during the working life, and it's almost the same standard of living after retirement. Because when you are working in a private sector, you are having better salary, better standard of living, and better pressure and tension. At the same time, their savings is absolute must to ensure the same thing after retirement. But you are doing is also right. No problem. Go ahead with it.
I see.
Now, if you are having any queries, you can send a mail to me. I will ask others.
Yeah. All right. Thank you.
Okay.
Hi, hi, Melvin. So this is Molly here. I just needed some suggestion regarding health insurance, basically. So there are different kinds of health insurance available. I'm not sure what basically to look into to choose any health insurance. I mean, sorry,
Okay.
I
how,
meant health.
how
Yeah.
old are you?
I am 34.
Okay. So for your age, who all are there in the family?
I have my husband and a kid.
Okay, so at the age of 34 and all, for husband, wife, and kids, if you are not having any health issues, there will not be any issue in getting a policy. You can purchase a combination of a base policy and a super topper policy. So you can see in my website, there are articles written on various topics that I forgot to mention in the presentation. I have a website called finwin.in. I written an article almost 10 years back covering almost all the topics. In fact, Ajay has helped me in writing many articles. So altogether now there will be more than 200 articles which covers all the basic fundas in all personal financial topics. So there are articles like why you should purchase a super top-up policy, how super top-up help you to reduce the premium, when you should purchase super top-up, and why you should purchase a policy in addition to corporate policy, etc. Please go through them and read them. So in simple terms, I can tell you, you can get a coverage of around 30 lakhs, which I used to recommend to all my clients of your age. Maybe your annual premium will be around 15 to 18,000 rupees only. So your husband, your child will be covered for a cover of 30 lakhs. In a year, you can spend up to 30 lakhs if there is a claim. That policy you can purchase from any of the reputed health insurance companies, and you keep paying the premium every year. And maybe after 5-10 years, you think about increasing coverage gradually as you are increasing in age and as and when the medical inflation goes. So start with the 30 lakhs coverage and then increase it gradually and pay the
But
premium.
then, I mean, the confusion is that, I mean, one, suppose say Star Health, you have a policy for 1 CR where it's a family policy. So then the premium is quite high. Whereas comparatively, if there's Max Pupa, where the premium is low, they also provide 1 CR. But the thing is, 10 lakhs is base what they're providing, and the other 90 is a top up, or I don't know, second policy which gets activated after.
Even I recommend to all clients that policy only 10 plus 9. I recommend
Okay.
5 plus 25 for the youngsters middle income group to start with. That is total coverage of 30 lakhs. Otherwise, those who can afford slightly better, they can go for 5 plus 45. Or if you really want to go for very high coverage, then go for a 5 plus 95 or 10 plus 90, like that for 1 crore. But I don't recommend 1 crore cover to anyone after seeing this COVID and all. This is nothing but emotional blackmailing after the last 2 years of COVID. People are ready to buy anything. But that is why I don't recommend 1 crore coverage to anyone so far. Only 1 or 2 people are going against. So my suggestion, go and purchase, because there's a clause in the insurance regulation. Anytime the insurance company can increase the premium with the prior permission from IRDA. Think about a situation, say 5 years down the line. We have some more diseases coming like this COVID or something. I'm talking negative, but it can happen. Because COVID has seen, we have seen it, something new can come. So at that time, there can be claims. At that time, if the insurance company goes to the regulator and increase the premium of this 1 crore policy to 3 to 4 times, then what will happen? This premium will become unaffordable for you. Correct?
Yeah.
And there is no provision for you to reduce the sum assured. If you've taken this 1 crore coverage, after 5 years, if you want to reduce to 30 lakhs, it is not possible.
And switching the company, the policy is not recommended.
Switching the policy is allowed and recommended only if you are in good health. So now we are 34, you can switch anywhere. Say 10 years or 15 years down the line, if you want to reduce your premium and you want to move to another company, the new company have all the right to say no if you are not in good health. That's a problem. So don't think that you can switch the policy anytime. The switching depends on your health condition at that time. So people are having a feeling that if I have a policy now, I can switch anytime. No, it is wrong. That's not telling. It is solved very wrong way by many people. So you should know what are the limitations. Whatever you have now, that you can continue as long as you live. So if you have a 30 lakhs coverage, that you can continue as long as you live, even if you have any health issue. But if you have 30 lakhs now, if you want to increase to 50 lakhs after 10 years, that is subject to your health condition at that time.
Okay.
Similarly, if you
Melvin
want to,
sir, am I audible?
Yeah, sure. Pooja.
Melvin sir, am I audible for the next question?
Yes.
As a provision for the children, often the gold is a part which is very needed. Honestly speaking, I don't have much of a gold investment in my portfolio right now. So what is your advice? Like, should we just continue with the mutual funds investments, or should we have some sovereign gold bonds as you suggested in the topic? Or should we have a chit fund into a reputed company like Tanish, in which, they have many offers wherein they pay one installment free every week, or they...
Tanish is a good brand of Tata, but even then I don't recommend any jewelry for that scheme because it has its own drawbacks. So that option is rolled out. Second thing, you can go for sovereign gold bond. That's the best scheme because you'll be getting 2.5% interest, plus you will be getting tax-free return, because in gold, if you invest physical gold, the gain is taxable. Whereas in the case of sovereign gold bond, after 8 years when you are getting that, gain is tax-free. So SGB, sovereign gold bond, will be a better option. You can have 5 to 10% of your portfolio in gold in a phased manner. Now, the last 1 or 2 years, I am not recommending because of the pandemic. Gold is gone to very high level because all other markets were bad. So when there's a pandemic or that type of situation in the country globally, then gold will spike. That is what is happening, especially when now Indian rupees also coming down. So we are feeling that gold price is going up in that way. But if we look at gold price in dollar, it is not going that much. But maybe 1 year down the line, when situation become normal after pandemic and all, you can think of slowly adding gold, and you can have around 5 to 10% maximum of your portfolio in gold. And don't think that gold is a stable investment. It also is highly volatile. In India, it is not looking volatile, not because of the gold volatility. It is because Indian rupee was keep on falling last so many years. Now it has gone to 77 against dollar. That is why it is happening. But if you look at you go to Google and search for gold price in dollars for the last 30 years, then you can see a graph which you will not believe. There are years where gold has fallen drastically. Then it took many years to recover that level. So don't be very bullish on gold. Can have around 5 to 10% of your portfolio in gold, not more than that.
So,
Thank you.
Melvin sir, can you
So
hear me? Melvin sir?
Sudesh,
Yes.
please.
Yeah, thank you for this wonderful session. It clarified a lot of things. So my question is, actually we have some of the LIC policies, the return was not that good, so we stopped paying the premiums. So now my question is, should we surrender those policies and withdraw money, or keep them till the maturity date?
Okay. So there is no generic answer to this, because I can comment on that only after seeing your total portfolio, your paying capacity and all. Because what happen in any insurance policy, if you want to get out any time during the term, you will be incurring a loss. The loss can be very high if you get out in the early part. Loss can be less if you get out at the later part. But what I recommend to all my clients, if the policy is maturing in the next 10 years, I suggest you better continue with that premium and get the maturity benefit, including bonus. Even though it is not going to be a big return, at least it is practically, it is better for your pocket. But if the policy is again running for 20, 25, 30 years and all, and you are just paid only 4 or 5 years premium, I recommend you get out of it immediately, even at a loss. But if you are only at a 4%, if you paid the premium for 4 years, then pay for 1 year and get the bonus and get out, like that. So it can be case to case specific. But if you are only paid for only 1 year, get right off it and get out. So that you will lose that premium, but still it is better.
Okay, thank you. And I have another question, Melvin sir. For the NPS, I mean, is it a good investment scheme, NPS, for retirement?
Are you asking about that 50,000 for additional tax benefit, or a higher portion, 10% of the basic pay where your employer want to pay, or you want to invest lump sum as like a mutual fund or something?
Actually, I have opened a national pension scheme. I mean, tier 1 fund. I am investing monthly of 10,000. So I'm just thinking, is it a good investment? Should I reduce the amount or increase the amount?
I will not recommend 10,000 per month in NBS, because you will be getting tax benefit only for 50,000 per year. So that you go for that if you are in 30% slab. Otherwise, I don't recommend, because 2 reasons. Number one, you can withdraw it only from the age of 60. And even at the age of 60, you cannot withdraw full amount. If you have 100 rupees in that account, you can withdraw only 60% tax free. Balance 40 rupees will come to you as an annuity. Annuity rate is very bad, and the annuity is taxable. Because of that, I don't recommend NBS in a big way. You can have maximum 50,000 per annum only for the additional tax if you are in 30% slab in tax slab.
Okay. Thank you.
Don't go more than that. It will not be good for you.
Don't
Go
go
for better.
Okay, thank you.
Welcome.
Hi, Melvin sir. Myself, Meera. Can you able to hear me?
Yeah, I can hear you, Meera.
Yes. My question is similar to Pooja ma'am. How much physical gold we can consume before investing into sovereign bonds?
Do you have a daughter?
No, just 1 year only we got married.
Okay. So if your community, as per your community or tradition, if you are having a habit of giving 1 kilo gold to your daughter on marriage, and you are expecting that you will have a daughter, in that case, you can start accumulating gold for that. Other than that, I don't recommend, because what happened nowadays, children are not wearing gold. I have 2 daughters, both of them are not having anything on their body. I have not seen same thing I'm seeing with all clients also. I'm not seeing anyone, new generation girls, they don't like gold ornaments. They just go for small platinum or something like that. I don't even know what it is. So the trend is changing. So nobody, maybe only for the marriage as a custom, they will be using it. So keeping that in mind, don't go overboard on purchasing ornaments and all now, gold coin and all those things. If at all you want, you purchase coin on their birthday or your wedding anniversary, something like that, and accumulate like that every year, slowly. But most of the important, most of the major part, you go for sovereign gold bond, because That allows you to purchase the gold at that time of the fashion of that choice. If you buy something now in ornament and all, after 20 years and all, the fashion what they are using will be entirely different. So you will be totally losing. The jewelers are having cunning ways of making charges and all those things. So don't do that. So avoid too
GST
much
is
of physical gold.
applicable for gold and sovereign bonds as well.
Pardon?
GST.
No. You
Okay.
invest the money. You are like in a mutual fund. You are investing and you are getting back totally tax free if you keep it for the entire 8 years, and you keep getting 2.5% interest, which is taxable, but it is at least getting some income.
Okay. Thank you so much.
So you can wind up. Still 70 people are
Other
there.
people, Pooja, you can ask your
Yes,
question.
sir, since I can take opportunity of one more question. Sir, for
Yep.
paying income tax, creating a fund through RDs on the advance tax due dates, let's say like 15th March or 15th September or 15th December, can we create every month a particular specific amount into the RD which matures on these dates? How would you rate this approach as for having a provision for the filing of income tax?
RD or liquid fund will be slightly better because there will be more flexibility. Because if you open an RD of say 10,000 rupees per month, then you cannot increase to 11,000 or 12,000, or you cannot reduce to 8 or 9,000. Whereas if it is a liquid fund, you have a provision to add it or increase it or decrease it. So I feel if you are having 4 installments of advance tax payment every year, if you have liquid fund, can be slightly better compared to this one, so that you can add as and when you have, and you can withdraw from that
How
and pay. Anyway, the interest is
how
going to
early,
be
how long it takes to convert the investment into liquid fund into
one
our
day.
bank account?
One working day. Monday morning, if you redeem, Tuesday account is mine in your account.
And again, it is applicable. It is taxable, right, sir? If it is within 1 year, or like,
Yeah, both
what is
the
the
cases.
tax implication?
Interest on RD and interest from liquid fund within 3 years is same taxable.
Okay. Thank you so much, sir.
Thank you.
Betty, you can ask your question.
Hi, Melvin sir.
Hi, Pragati.
Yes, I just wanted to ask that how to calculate the higher education for kids if they want to say study overseas. I have 2 kids, like 5 years and 10 years of age, and I want to invest for their higher education. So, what will be the best way to invest for their higher education?
Where are you working?
Actually, my husband is an NRI, and
Okay.
recently we are based in Kenya.
Okay, so your children are now in the age group of 3 and 5, correct?
No, 5 and 10 years.
Okay, 5 and 10 years. So it is too early to understand their taste and what type of a stream of education they'll be taking. Even after 2-3 years, it will be
Yes.
difficult. Okay, number one. So what I used to suggest to all my clients is, don't think about that line of the stream and plan for it. Plan according to your budget. Your income,
Okay.
say you are getting 1 lakh rupees in a month. I'm taking an example. I know you are earning more than that. You are getting 1 lakh rupees per month. Out of that 1 lakh, how much you can spare for all the bread, butter, goals, I will say. Retirement,
Sure.
higher education, and marriage. Even if you skip the marriage, higher education and retirement, these 2 things you should prioritize and plan it. So then you think about the budget, work reverse, how much you can afford to invest monthly. Then work reverse and arrive at an amount. And let the you give good education till 12th, they let them decide the stream and join for the course, preferably one merit, so there will not be much cost. So it
Sure.
partially depends on your paying capacity and how early you start. You start early. Now for your second child, you have time. But for your first child, it's already 10 years, correct?
Yes, yes. Only hardly 8 years are left for
Yeah.
him.
So 7 to 8 years is too shorter time to get into equity. So that you have to plan through debt mainly. For a second child, you can start investing from equity right now. That will help. So that's the way you have to plan. So start early is the mantra, and start investing according to our paying capacity is the second way.
Yes. Thank you, sir.
And if there is a shortage, you can think about education loan. There is nothing wrong in it.
Yes, yes, yes. Certainly.
Once you have the basic things ready, the children can manage balance either through scholarship or through education loan.
Yes. Thank you.
Hello. Hello, sir. Hello. Am I audible? Hello.
Yeah, sir. Yeah.
Sir, I'm 28 and I just started investing. So I wanted to know your opinion about ELSS funds.
I didn't get you. First one, your age is 28.
So, and I've just started investing, so I wanted to know your opinion about ELSS funds as a tax saving measure, sir. And
I
how
don't
much?
recommend. I don't recommend ELSS funds at all, because for a person of 28 years starting the career, I will suggest a combination of PPF plus other mutual funds. So the PPF itself will take care of ATC. So you will be having your provident fund, correct?
Yes, sir. Hello.
Your
Yes, sir.
your provident fund is there.
No, sir. No, sir. I don't have one yet.
You don't have PPF. You don't have PPF. Then that's all the most reason to open a public provident fund. So you open a PPF that invest 1.5 lakhs or 12,000 rupees per month in that. Balance money you invest in normal open-ended equity mutual funds. That will give you better return. So I don't recommend ELSS. So you go PPF plus normal equity fund combination will be better for you.
Okay, so but are the returns higher in ELSS as compared to PPF,
No,
sir?
no. So if I am an agent, I can project an ELSS of based on the recent performance and sell you. That is not the right way. I don't recommend ELSS at all, because
Okay,
I don't like any product which is having lock-in period. So it's always better to go for open-ended product. And you cannot invest everything in equity. That is why I am pitching a PPF. So once you have PPF, the debt will not be taking care. Your ATC will be taking care. Balance will be in PPF, which will be open-ended.
Okay, sir. Okay. Thank you, sir. Thank you.
Sir,
Veena, you can ask your question.
one very small and a very, very basic question. We are preparing ourselves for the retirement day with all the investments into our mutual fund portal. Now, sir, I am really looking as per your guidance and whatever is the maturity or the valuation of our mutual funds. How exactly it goes once, like say we are 65, 70. Suppose we have a corpus of let's say 2-3 crore rupees in our mutual fund account. How actually you plan to make us have that covered for our expenses during our retirement? How does the flow work?
See, closer to the retirement, you'll be reducing your equity. You cannot have the higher allocation to equity closer to your retirement. That is called rebalancing. Suppose you're retiring, say, at the age of 60. By the time you retire 60, your equity will be gradually reduced to, say, around 20% or even less than that, depending on your experience or your exposure to equity and your ability to handle the risk control. And then you start withdrawing from that corpus of, say, 2 or 3 crore, which will be around 15% in debt, equity, balance in debt. So from the debt, you will be withdrawing. So the market volatility will not impact you, because the 15% equity you are not going to touch till the time you reach around 80 years old. So you'll be having a safe portfolio, mainly of debt, and you will be withdrawing from the debt only for the monthly expenses. That is how it has to be planned. That's called a systematic withdrawal plan. So now you invest through SIP while you are working, and withdrawing through systematic withdrawal plan, mainly from equity, debt only, not from equity.
Thank you, sir.
Now you can ask your question.
Hi, sir. Am I audible?
Yeah, sure, please.
Yeah, hello, sir. So my question is like, if I fall under a low tax bracket, so should I still invest in debt fund for the indexation and the benefit and tax benefit, or I should go for the like fixed interest generating products like post office NSC and all, so that my means.
I recommend debt funds only after exhausting PF, PPF, Suganya, if option is there, like that only. So debt fund should be the last option after exhausting the government schemes. So PPF, Suganya, all those things stands much better, or even voluntary provident fund, even after this taxation of 2.5 lakhs, even then it is better than debt funds. So debt fund should be only after that. And if you are in 10% tax slab, I will not recommend debt fund. It will be better to go for FD or RD only. So once you are moving to 20% tax slab, then only the debt fund is going to be attractive. Till the time, RD, FD is better after even exhausting PPF, etc.
Okay. So means like if I invest in NSC for my debt portfolio and the rest in index fund or equity funds, so is that fine?
Yeah, that's fine. That's fine.
Okay, sir. Thank you so much.
Welcome.
Sir, sorry.
Yes, I need.
Sir, is it the right time to invest in gilt mutual fund? Means like as the interest rates are fluctuating, so I'm just worried. So
no. To be very frank, I don't recommend the gilt fund to a normal middle class investor, because he don't know how these things will work. When the market goes, That means if the RBI increase the rate, Gulf fund can even give negative return. So now it's going to be a tough time for Gulf fund, because Gulf fund has already started bleeding, because RBI will definitely increase the rate at least for 2-3 times this year again. So at that time, Gulf fund will give negative return if you're in a long-term Gulf fund. I recommend only ultra short and debt funds for middle class investors, because they don't understand the way interest rate and Gulf fund return will work. It is a reverse thing. So maybe after 2 years, when the RBI reaches the peak of repo rate, maybe from 4% it may go to around 5 to 5.5%. That's what I feel. From there it start reducing. At that time it's the right time to get into guilt, provided you are sure next 15-20 years it is going to be less. So it is a reverse thing. So you should be very careful in investing guilt. So it's better to avoid guilt, stick with the ultra short and debt funds, and be happy with that return. Don't take risk with the guilt. Sorry, debt fund, that's the same thing I'm repeating.
Okay, sir. Thank you. Thank you so much.
India, Sudeshna, you can ask a question.
Same people are asking again and again. The new people are not getting chance. The people are already asking some questions. Balance queries like an email. So let us give chance to new people now, please.
Vishwi, Sindhya, Sudeshna.
Ajay, I already asked the question, so I'm done with my question. I got the answer from Melvin. Thank you.
Okay, so you can lower your hand. Only 5 people are raising the hands now. We'll wind up.
4 people, but I think they've already asked, so we can
Okay,
close
fine.
it now.
Okay, then we'll wait. Okay, then thank you all. Still, a lot of people are still listening. Thanks for your patient listening on a Sunday. And if you have any queries, as I told in the beginning, you can mail to melvin@finmin.in. I will try to reply in a couple of days' time. Okay, thank you.